Senator Case,
Present.
Senator French,
Here.
Senator Ide, Senator Pappas,
Here.
Representative Brown,
Here.
Representative Campbell,
Here.
Representative Lean,
Here.
Representative Lucas,
Present.
Representative Riggins,
Here.
Representative Storer, Representative Stivar,
Present.
Representative Worf,
Here.
Co-Chairman McEwen,
Here.
and Chairman Locke. All are present, Mr. Chairman.
Good morning, Mr. Chairman. I'm Ken Giel. I'm the Administrator of the Property Tax Division for the Department of Revenue. Thank you so much for having us here this morning. The first topic on your agenda is for this morning is about the CAMA system. I've put together a presentation about the CAMA system. I will tell you, Mr. Chairman, it's a very high level view of the CAMA system, not too deep in the weeds, a little bit. We do get into it, but I spoke to your co-chairman, and I would like to offer to the committee sometime whenever the schedule would allow, maybe sooner than later, an actual virtual meeting where folks can sit and look at a live CAMA system and ask questions. We can poke around. We can show the different things that happen when you change things in the CAMA system. So if it would be all right with you, I'd like to do that next week. And I'll send out a Zoom link to the chairman, and then you can pass that out to the rest of the committee. So just offering that up.
Go ahead, Mr. Co-Chair.
Thank you, Mr. Chairman. So I do like the idea, and I guess what I wanted to float out to folks, because I think what is likely to happen in this, there's probably a lot of questions. And so this may give us an opportunity for the ones that are easy to answer here today, we could do some of that. But I think that gives us an opportunity maybe to take a deeper dive on some of those questions in that demonstration. That's me thinking out loud, if that sounds reasonable, Mr. Gill. And then one thing I would ask the committee, the entire committee, if what the timing on that would be best and what the department could support. But I know there's probably opinions on that, and I wanted to make that available. So thank you, Mr. Chairman.
We, a majority of this committee will be in Powell Tuesday and Wednesday. And some of the rest of us will be in Casper on Monday. So we'd have to do Thursday, Friday, if that works for anybody. Does Friday work for you?
Mr. Chairman, I'll make it work. Absolutely. And that would be in the morning. Would the morning time be best? 9 a.m.?
Works for me.
Okay. And Mr. Chairman, we could always record it too. And then I could send a link out to committee members that couldn't make it at that time. So we could do that. Right.
You're brave man, being brave man.
All right. Well, thank you, Mr. Chairman. We'll schedule that for Friday the 13th at 9 a.m. and I will have a demo ready and people can ask questions on the fly. So I think it'll be a great opportunity for folks to be able to sit in front of their laptop or their desktop and actually be able to see the screen. We could have done a live demo here, but I always worry about the AV issues in different rooms. You never know what what that could bring, and it might be a catastrophe for sure. So with that, we'll move on to my presentation, if that's okay, Mr. Chairman.
Sounds good.
All right. I'd like to start off on the first screen. CAMA is not some black box sitting in a back room just making up a value. It really is a tool. It's a tool used by the assessors to organize the data, analyze the data, and then appraise the data for a fair market value according to Wyoming statute. We go on to the next slide. Essentials of a CAMA system. We have data management, we have valuation, performance analysis, and then administration. I think those four things could be used in almost anything, in business, in whatever software you're using in business. I think these four bullet points probably are universal in most systems. I will say in this slide, Wyoming's CAMA system is customized for Wyoming laws. We have been working in this CAMA system, the current modern CAMA system, for almost 20 years, just over 20 years. So it has been customized for Wyoming law. On our next slide, just some bullet points, and I won't go over all of these, Mr. Chairman. Data management, some of the things our CAMA system does, and you can read through those. Just high-level sketching capabilities, sales tracking, a separate sales file, where you have a sales file that is when the property sold and what it looked like when the property sold, what the characteristics were versus what is actually in the production record. Maybe that after that house sold, maybe a garage was built on the property or something like that. So it does separate those sales files for the assessor. Income and expense data, it will hold that. And of course, reporting. And going on to the slide 5, the valuation in CAMA. Currently
Mr. Co-Chair.
Thank you, Mr. Chairman. I'm sorry. Describe that last one again. You say I think the income and expense data. If you can talk to that, that's a component I'm not familiar with at all, but it would be helpful if you could just elaborate a little bit what that is. Thank you.
Thank you, Mr. Chairman. Co-Chair, expense and income. If you recall, back in Property Tax 101 that we did a few years back in Sheridan, there are 3 approaches to value, right? We have the cost approach to value, we have the market approach to value, and we have the income approach to value. And that would be the income and expense data that the CAMA system can hold and handle. You're welcome. Thank you. Going on to the next slide, in slide 5, the valuation in CAMA. Currently, our current CAMA system is using cost tables by CoreLogic, Marshall, and Swift. And that is a very large company that studies cost and building cost across the country and across the world. Of course, valuation, it has depreciation schedules, land valuation module, standard statistical procedures, and a spreadsheet module for use in income again. So again, this CAMA system can employ all 3 approaches to valuation. Going on to slide 6, the performance analysis in a CAMA. So how is our appraisal? We have sales ratio studies, and we'll get into that a little bit later. Measures of assessment performance, the median, the mean, the weighted mean, the coefficient of dispersion, price-related differential. I know those are all terms that probably you're all super familiar with, but we'll actually get into those terms here in a little bit. And the ability to stratify the data, the ability to group that data into certain areas that you want to appraise together. Typically, an assessor will take groups of homogeneous properties and put them together in an analysis. So in smaller counties, maybe it's the whole county. In a larger community, maybe there's by neighborhood, maybe by subdivision. It's hard to say how that analysis works, but what they're trying to do is get the most common properties, similar properties together in a group. So in our CAMA system, we have that ability. Going on to slide 7.
Representative Riggins.
Thank you, Mr. Chairman. Mr. Gill. So each assessor has to, create that profile for each of their communities. When you talked about the different neighborhoods and all that. So do they do that, input that material, data themselves, or do you have a specialist come up, update that? Who performs those, changes?
Mr. Chairman, great question. It would be the county assessor. They're aware of their communities. They know what their communities, they know where their houses are selling. They know, let's say, for instance, I'm the former Laramie County assessor. I knew the areas of town that were homogeneous, right? That were kind of built at the same time, the same type of quality, that sort of thing. So yeah, it is the assessor that does that grouping.
Thank you.
Going on to slide 7.
Can you,
Oh, I'm sorry.
this might be a good time for you to cover LEAs too. If we're talking
Sure.
comparable neighborhoods, if you don't mind.
Yep, Mr. Chairman, I sure will. LEA, that actually is a vendor specific term. It really wasn't used before we went to the modern CAMA system. So that's what they called it in the CAMA system. So a land economic area, or LEA, is grouping of land, and a neighborhood is grouping of improvements. So the module, as you know, in the Constitution, it requires that the land and the improvements be valued separately. So in this CAMA system, we have the ability to value the land, LEAs, land economic areas, and we have the ability to value the neighborhoods, the improvements. So it is grouping that way for analysis and analysis of the sales.
Representative Lean.
Thank you, Mr. Chairman. Thank you for that explanation about LEAs. If there was somebody that wanted to challenge the group that their neighborhood is placed in, how would they go about doing that?
Mr. Chairman, that's a great question. Everything is appealable, right? Except for your tax dollar amount. We're never appealing, and we'll get into that later on today, but we're never appealing the tax dollar amount. We're appealing the valuation of the property. So yeah, if the taxpayer feels they're in the wrong grouping, they obviously can appeal that. Going on slide
Co-chair.
7. Oh, sorry.
Thank you, Mr. Chairman. And sorry, just want to be clear. So the LEA is very specific to the land component only. Is that right? Just trying to make sure it's crystal in my mind. Thank you.
Mr. Chairman, it is. Obviously, though, Mr. Chairman, we're looking at the overall value. You know, we're looking at the overall value of the land and the improvements. So we're really using that in our analysis. But yes, the LEA is the separate module for the land.
Representative Stivar.
Thank you, Mr. Chairman. This might be off topic, but land use regulations, does that work in with the CAMA system through the county?
Mr. Chairman, land use regulations, so zoning, I'm assuming, the assessor will take those land uses and those restrictions, if you will, sometimes restrictions or non-restrictions in some cases, and they'll take that into consideration of their model. So when they're building that model based on sales, they'll take that into consideration. And of course, again, like we talked about yesterday, the only way to appraise something is to have sales of something, right? I mean, you have to have a sale in order to find a fair market value. So yes, I think those are taken into consideration. One that comes to mind would be deed restrictions. In certain counties, properties are deed restricted. And so, yes, the assessor will take that into consideration. Is there a specific module in the CAMA system for that? No. On slide 7.
Representative Lucas.
Thank you, Mr. Chairman. So, Mr. Gill, is it not true, though, that a homeowner could hire an appraiser and buy an appraisal? A certified appraiser would provide an appraisal for a fee to a homeowner.
Mr. Chairman, yes, you could always have your property
Okay,
appraised.
so that's another way, though, that you can get an appraisal.
You can get an appraisal, but that doesn't mean that the assessor can use that appraisal as the final valuation. Just like they can't use the sales price of a property as the final value for that property. State Board of Equalization, Jan Charles Gray versus State Board of Equalization makes that quite clear that without use of typical appraisal practices that and just using the sales price of something would be a travesty, is what they said, a travesty. And then, of course, they incorporated the CAMA system in there. I'm paraphrasing, obviously, from the Supreme Court there, but that just because someone has an appraisal of that property, it doesn't mean it's going to be higher or lower than the assessor. What if it's higher? Should the assessor use that or not? They're not going to base that sole property, because keep in mind, the assessor is appraising a universe of properties, right? They're not going to each single property and saying, okay, here's my property, like a fee appraiser, like you're familiar with banking, of course. Like a fee appraiser is going to go, okay, here's my subject property, right? This is the one I'm appraising for a refinance, let's say, and I need to come up with a value. Well, then they get to go out and find 3 comparables, and then they're going to adjust those comparables, right, up or down. The subject doesn't have a fireplace. The comparable does. So they're going to subtract that fireplace out of the comparable to get it to match the subject. And then they're going to look at the sales prices of those comparables. And then they're going to pick a value for that subject property. So very similar to what the assessor's doing, but he's doing it in a mass setting, more properties at one time.
Representative Lean.
Thank you, Mr. Chairman. Along that note of when you're using comparables, is there a time frame in which that occurs within 5 years, 3 years, 10 years? Do they go back 20 years in some cases?
Mr. Chairman, that's a great question. I think that's going to vary by community. Some communities don't have a lot of sales on a yearly basis. We have one county in this state that if they have 30 sales in a year in their community, that's a lot. And then we have counties that have 3,000 sales a year. So I think that's going to vary by county. Of course, in appraisal theory, yeah, they could go back 20 years is probably going to be too far. I mean, that's a long ways. But if they do have to go back that far for whatever reason, they're going to time adjust that for time as it's happened. Whether the market went down, the market went up, they're going to time adjust those properties. Now, if you're talking like a fee appraiser is going to use the most recent sales he can find that are his most comparable to his subject property. All right, we'll move on to screen 7. The assessment administration, we're still on the bullet points of a good CAMA system. Assessment schedules, obviously it has to be able to produce assessment schedules, has to be able to produce a tax roll, apply and report exemptions. We're all very aware we've had quite a few exemptions over the past couple of years, and we can report on them. And you saw some of those reports yesterday. Reports of value to all taxing authorities and interface with geographic information systems, or GIS. So in our CAMA system has an integrated GIS system in it. So they can view that data spatially, if you will. Going on to screen 8. This is a screenshot of the main screen that is the CAMA system. You can see those larger icons up there at the top. Those are the different modules within our CAMA system. We have real property, personal property, oil and gas equipment, state assessments, appeals, permits, subdivisions. I will say about subdivisions, someone comes in and creates a new subdivision, a developer does. The CAMA system, instead of that staff member or that assessor having to create one record at a time, they can create that whole new subdivision and have it numbered automatically and go into the CAMA system. So it automates a lot of the processes that go on a daily basis. Of course, we talked about the income module, sales module, analysis module. We have applications, admin for different things that the administration needs to do. And then batch. The batch module is something where, let's say, in simple terms, we want to add the homeowner's exemption to every single family residential structure in the state. And we had to do that this year. So in batch, we could query for the exact abstract code of those houses that got the 25%, and we could apply that 25% all at once.
I have a quick question on subdivisions, please. If I come in and build a new subdivision, I built 30 houses. Are those the comparables? And are we kind of using what it's sold for at that point in time?
Mr. Chairman, they may not be all of the comparables. I mean, it might be a larger neighborhood that they're looking at than just the 30 houses. Typically a subdivision, in my experience, a new subdivision is around another new subdivision, around another new subdivision. So it might be all three of those subdivisions that are your comparables. So, or the sales being used for your analysis.
Okay, thank you.
Going on to the next screen. What information is stored in the CAMA system? Property tax is not only paid by residential properties, right? It's minerals, it's state assessed, it's commercial, it's industrial. That's all stored in our CAMA system, all that data. When we go to the CAMA system next week and look at it, you will see that we have sketches of almost every structure out there. We have pictures of almost every structure out there. We have the land data of every parcel out there. We have the personal property assets. And some of those get large. Coming from where I came from, one of the early data centers, when they submitted their personal property, that list was huge. We have them in the CAMA system, each individual asset in that case. Of course, it has state assessments. We talked about state assessments yesterday, minerals, utility companies, railroads, telecoms, that sort of thing. That's in the CAMA system. Of course, we talked about the costing tables from Marshall and Swift. Those are in the CAMA system. We have statewide uniform reports. You live on a county line and you own both sides of the property across the county line. You can get the same report from that one assessor that you can the other assessor. So we have uniform reporting statewide. Notices of value, of course. It holds the exemptions. Obviously a hot topic that we've talked about in the past couple of years. All of our exemptions are held in the CAMA system. The homeowner's exemption, the long-term homeowner's exemption, pollution control, fire suppression exemptions. Of course, the 4% cap, that's all in the CAMA system. Appeals. The CAMA system has a very robust appeal module, which that way, when a person comes in to question their value or appeal their value or maybe question the characteristics of their property, the assessor can track that person in their system to make sure that nothing's left unturned, so that, you know, they preserve their right to appeal further if they must. So that's the CAMA system basically. I mean, and that's just a very, very high level overview. And now we'll kind of get into a little bit more into the weeds, if you will, Mr. Chairman.
Representative Lean.
Thank you, Mr. Chairman. I want to go back to the state assessments. When yesterday we were talking about obsolescence reports, the functional obsolescence reports, is it possible that you could pull out of CAMA a report that shows us all of the state assessed obsolescence reports?
Mr. Chairman, no, not in CAMA. Our state appraisers do not use CAMA system. We store those values in the CAMA system for the county to report to the treasurer, then for the treasurer to collect that.
We could get that from the State Board of Equalization though, could we not?
Mr. Chairman, no, the State Board of Equalization wouldn't have that information either. All right, we have appraisers on my staff that appraise railroads, appraise telecoms. Keep in mind, a state assessment is much different than what you're thinking of your house and your neighbor's house, right? It's much different. We're valuing the entire company. We're valuing assets that may or may not be in Wyoming. And then we're prorating Wyoming's piece of that. So there are assets that we are valuing that will never have situs in Wyoming. They will never be here. We're valuing the entire company and then giving Wyoming share. And then even further down, that county share, even further down, that tax district share. So no, there's no real reporting for that. And all of the information that is provided by the state assessments is confidential.
Follow up?
Mr. Chairman, thank you for the follow-up. One, statutorily, I've never seen anywhere that says that state assessments are confidential. So if you could direct me there, that would be wonderful. And two, sitting as a revenue board, it would be very helpful for us to have a list of all of the things that you just named to be able to make adequate, educated decisions on the assessed values moving forward. Thank you for your time.
Absolutely. Mr. Chairman, I will find you that statutory reference. Moving on to a little bit more in the weeds. We talked about Marshall and Swift in the CAMA system, and those are our cost tables. They're by a company called CoreLogic, and they gather and monitor building cost data nationwide. They track market trends nationwide, evaluate industry standards nationwide, so different building types, different building processes, and they feature the most up-to-date cost figures available in the country today. Who uses Marshall and Swift? It's not only used in the CAMA system. It's used by fee appraisers, bank appraisers. They use that. It's used by insurance companies. It's used by accounting companies, construction and development companies, and in the banking industry. And I'm sure this is not a comprehensive list. I'm sure there's other industries that use these same exact cost tables. And if I could, Mr. Chairman, if anyone would like to see these, I apologize. I did not get them out, but I have them over in my box here. I have the actual cost table books. And if anyone in the committee would like to look at those books, we actually have them here. So I brought them with us. They're pretty large and they're kind of hard to pass around, but if anyone would like to look at them, we have them over here on the side.
Senator Ride.
Thank you, Mr. Chairman. Thank you, Mr. Guile. That Marshall and Swift, I've got some experience with that commercial multi-tenant office buildings. And, in my situation, it didn't work at all. I mean, it's a mess. There was no comps. I mean, I'm the only one that's bought a multi-tenant office building in downtown Casper in the last 30 years. And so there was no comps. So they go to Marshall and Swift and, take replacement cost less depreciation. It's still 7x what market value is on that particular property or properties. So it just seems so arbitrary, that you go from, market value. So then you move into the cost approach, as you mentioned earlier. Those are the three values. And, I know a lot of landlords, they don't like to expose their income statement, so to speak, because who's behind the curtain telling their buddies what, the tenant roster is at a certain building. So what are your comments on how to navigate? We tend to focus on residential. There's a lot of commercial and a lot of industrial out there that one size fits all doesn't really work for them. Thank you, Mr. Chairman.
Mr. Chairman, great point, Senator Hyde. My first question, I answer a question with a question. When it was purchased, how did the appraiser appraise it? I mean, they used something. They either used a market approach, they used an income approach, or they used a cost approach. and probably considered all three approaches to value and did a reconciliation process to come up with that value that a lender would lend for that building.
Follow up.
I'll answer that question of my questions. As you mentioned, there was no appraisal when it was purchased, and it was a purchase of 25 years old. And the value pretty much stayed the same until approximately COVID. And then everybody woke up and started scrambling jets, it seems like, to make things different. And there wasn't an appraisal needed for it. I mean, it was purchased at, dollars on the square foot versus multiple dollars on the square foot of what they were trying to assess it at. So I don't know if that answers your question, but it was a private transaction. They essentially used a statement of consideration, which I think ought to be the method, a willing buyer and a willing seller with a cash or equivalent purchase. So does that help? Thank you, Mr.
Chairman, yes, it does. So, those are rare deals that you find yourself in there, where it's basically a cash offer in many cases. Those are rare deals in commercial properties. The appraiser has to use something. I mean, commercial properties sell every day, and they're not sold by cash every day. The appraiser has to use something. So they're going to use one of the approaches to value. And one of those approaches to value is to come up with an estimate of what a willing buyer and a willing seller would sell the property for. So that is appraisal. But that's the best I can answer on that question, Senator.
Representative Lean.
Thank you, Mr. Chairman. Yesterday, you noted to us that assessors are trained certified appraisers. And then I see here on the list that the fee appraisers also use Marshall and Swift, but just moments ago, you told us that a fee appraiser's appraisal would not do what an assessor needs it to do. Therefore, the assessor has the ultimate authority. On what grounds is the authority of the assessor greater than a fee appraiser if they're using the same background?
Mr. Chairman, great question. So we're looking at two different types of appraisal here, right? We have a fee appraiser. They're appraising for lending. And we have a mass appraisal or a mass appraiser that is appraising approximate estimated value for taxation. So two different things there. So is one better than the other? I know banks that have used the assessed value that the county has on a property before for a refinance for a well-qualified customer, and not made that customer go through the appraisal process and pay the $1,000 for an appraisal for the lending. So two different animals for sure between the two appraisal methods, but both qualified. So the cost tables, we talked a little bit about that, Marshall and Swift, Core Logic. Cost tables are rolled into the CAMA system. They go through a big vetting process, not only by our vendor, which is Harris Govern. They go through a vetting process through the vendor. They go through a vetting process of my technical services group of the property tax division. And then they go through a vetting process of the appraisal service group. So everyone is looking at these tables to make sure that they match the books, and the books that I have in the box over there. The numbers in the CAMA system match the books. So we go through a very complicated vetting process to make sure that those numbers are correct once they get in the system. And then those tables are placed in all 23 counties. And my technical service group daily makes sure that those tables are uniform throughout the state. And going on to slide 12, I wanted to take the time to, and this getting a little in the weeds, but I wanted to take the time to show you a house in CAMA versus me opening that book and doing it by pencil. So that's what the next few slides are. Now, I will say I did not do every component of this property. I did not include the garage. I did not include the patios or the driveways or anything like that on this property. I just did the house. So, but we can pencil it all the way down to every characteristic that this property has. So in this example, you'll notice the characteristics over on the left. This is a 1,300 square foot home. It's a frame home with wood siding, has composition shingles. The HVAC in the home is electric radiant heat. It was built in 2015. It has a 2 fixture, a 3 fixture, and a 5 fixture bathroom. It's of averaged quality, and the wall height or the ceiling height in this home is 10 foot. So if we go on to the next pages, page 13, and these, it's going to be kind of hard. You're going to have to kind of flip back between this main page, this 13, and the pages that we continue on with. So what I did was these screenshots on the left are from the CAMA system, showing the ultimate price per square foot after adjustments have been made. And we'll explain the adjustments as we go along. And then on the right-hand side of the hand calculations, straight from the book. And then in our future pages, you'll see pages from the book. So right now, the final price per square foot on the residential structure in this case is $146.54, and you'll see that's in the CAMA system, and you'll see that's in the hand calculations. Going down the hand calculations, we start at 127 per square foot. We have a cost multiplier, which is a regional multiplier of 1.07. Then we have a local multiplier, and this subject property happens to be in Sheridan County of 0.96, and a story height multiplier of 1.06, giving us a total of 138.28. We bring that 138.28 down. We make an adjustment for energy. We make no adjustment for roof in this case. We make an adjustment for flooring in the property. We make 0 adjustment for the interior, and we make a negative adjustment for the HVAC. So keep those adjustments that you're seeing in this hand calculation in mind. And as we go to the next pages, you'll see where we find those adjustments in the book. So going on to page 14, this is a picture of the average quality. You'll notice at the top, average quality, stud framed, and I circled the wrong one. That circle should go over to the right because it's a wood sided house. So it should be 127. So I apologize. I circled the wrong one there. So the 127, and if you remember back on page 13, the very first line was $127 per square foot for this home. Going on to page 15, now we need to make an adjustment for energy. In the Marshall and Swift manual, the costing manual, everything in the costing manual is based on a moderate climate. Obviously in Wyoming, we don't live in a moderate climate. We live in the extreme climate. We have different insulation, different building types. So there is an adjustment of $316 per square foot. If you go back to page 13, you'll find that, but it's actually $325 because we take that $316 times the cost multiplier times the local multiplier to come up with that $325 per square foot. Going on to page 16, you'll see the cost multipliers, and I won't read it to you, but you can read what the current and the local multipliers are. It's to get these cost tables that they have built for the region that's being appraised. So we're in the western region in Marshall and Swift, so there's a 1.07. You'll notice back on 13 that was the exact amount that we were adjusting. And then on page 17, that's the local multiplier. Now you'll notice there's only 6 multipliers in the state of Wyoming for the localities. So if the locality does not have a multiplier, they use the Wyoming average multiplier. Sheridan in our subject property here happens to have a local multiplier. So that is 0.96. And if you look back at page 13, that will be your multiplier there. Going on to page 18, interior finish. Remember, our subject property had 10-foot ceiling heights, right? So not your standard 8 foot. So in the costing manual, it says add 3% for every foot over 8 foot. So if you remember back on page 13, our multiplier for that was 1.06 or 1 plus 6%. Then we look at the square foot adjustments for the roofing. In this case, our subject had composition shingles, and that happens to be the base for that style of house or that quality of house. And so there was no adjustment for roofing. Going on to page 19, now we need to look at the HVAC system of this single family res. If you remember back on page 12, our subject property had electric radiant heat. And when we go to the page in Marshall and Swift, it says the base of that style average home would be forced warm air. But since this has electric radiant, we're going to subtract 76 cents per square foot for that single family res. Going on to page 20, now we're adjusting for the flooring. I think most assessors use this allowance for flooring because they don't get in every property and are able to measure the exact amount of carpet, the exact amount of tile, laminate flooring, wood flooring, that sort of thing. So I think most use the allowance. And in this case, it was 564 per square foot times the local multiplier times the cost multiplier for the region. And then on page 21, you'll find the explanation of each of those. And you can always take those and look back to page 13 to see that in the system, we're making the same adjustments that are made in the Marshall and Swift cost tables. Then to take it further on page 22, Mr. Chairman, I pulled a report out of the CAMA system. This is a uniform report statewide. All of those adjustments that we just went over are actually in this report. And this is called the cost breakdown. Very good report. The stuff in the upper left-hand corner are all those adjustments that starting amount of 127 per square foot with all the adjustments. And then below that in the lower left-hand side are all of the add-ons, if you will, or details. Talks about how many bathrooms, the 2 fixture, the 5 fixture, the 3 fixture. It talks about some type of porch on this property. It talks about a rough in and gives a plumbing adjustment at the bottom of that. Over on the right-hand side, you'll see that it starts with the replacement cost new of $230,400. It's a 100% complete home. So the RCN is $230,400. And then as we go down that line, there's an adjustment for physical depreciation. It was built in 2015. So we take that depreciation off. Our RCN less depreciation, or RCNLD, is $211,968. Then we go down to adjustments to the RCNLD. In this case, we bring that $211,968 down. There is a neighborhood adjustment in this area based on sales, and we'll get to that. So there's a neighborhood adjustment based on sales, bringing the market adjustment cost or the fair market value to $339,149 plus the land. So we've made a market adjustment in this area based on sales. Of course, I didn't do this. I'm using someone else's data, but and then to be in compliance with the State Board of Equalization made the market adjustment. So that's kind of in the weeds a little bit, Mr. Chairman, of matching the CAMA system up with the costing manuals.
Representative Lodge.
Thank you, Mr. Chairman. So is this a report that any homeowner can request from their county assessor and get this?
Mr. Chairman, absolutely. Absolutely. This is a uniform statewide report. It won't have the cost breakdown report available in all 23 counties at the bottom, but in red. But yes, it is available in all 23 counties for every improvement. So if it be a shed, it will have a cost breakdown for it. If it be a detached garage, a pole building, a multi-tenant office building, yes, absolutely. This is available for every improvement there.
Representative Lee. Then Senator.
Thank you, Mr. Chairman. Would you just walk the committee through the difference between bath 3, bath 2, bath 5 on this cost breakdown?
Mr. Chairman, that's a great question. So bath 2 would be a 2-fixture bathroom, typically would be a sink and a toilet. Bath 3 would typically be a toilet, sink, shower, toilet, sink, tub, possibly toilet, sink, shower, tub combo, something like that. Bath 5 typically would be something like a toilet, a tub, a separate shower, and 2 sinks, typically. That changes. I mean, it varies by house, but that would be the typical setup.
Senator Ide.
Thank you, Mr. Chairman. Mr. Guile, yeah, this cost breakdown sheet, my question would be, why can't we, or how expensive would it be to get that to every homeowner? I had an experience with this as well too, where you don't really know how they're valuing anything until you see this. I had a building with 4 stories and, they had the square footage on every story, and then they had the elevator machine room. And the machine room had as much square footage as the entire building. It was 600 square feet, and they had floors 1 through 4 calculated total included that in the machine room. So you really can't get under the hood until you start complaining and appealing. And if that data was there from the jump, you could detect where the issues are from the get-go. Thank you, Mr. Chairman.
Mr. Chairman, that's a great observation. I don't know that you would need this cost breakdown for that, honestly, but I think all 23 counties share their characteristic data on their websites. And I know as a property owner myself, I go to my county assessor's website and I make sure that he has the right amount of bathrooms in my house, the right amount of square footage, that sort of thing. So I think that data is readily available. I was in an assessor's office for 25 years. Early on in my career, none of this data was available. I mean, people would come in, appraisers would come in to get the characteristics, right? Fee appraisers. They come in, they grab our record cards to get the characteristics because we were the data holders. And then they would file them in a box, and then a staff member would go file them in the proper folder. But when GIS mapping came along and we could share that data out there, the foot traffic in my office alone, and just from my experience, went from knew every fee appraiser, knew every insurance agent in town, to never seeing anyone come in for that data anymore because it was on the web, was on the website. So I think it's, to your point, I think it's very important that as property owners, we go out there and look at those characteristics that our counties are providing online and doing a great job of providing that service. Of course, there's nothing stopping you from giving a phone call, whether it's during an appeal time or not, and getting a copy of one of the reports that are in the CAMA system, whether it be this cost breakdown. I don't think this cost breakdown would give you exactly what you wanted in your scenario, but we have property profiles out there too. Good reports shows the characteristics of a property. So I would encourage any property owner, whether it be commercial, industrial, whatever the case, to go out and seek these reports, or at least go to their websites and look at the characteristics to make sure that mechanical penthouse wasn't the same size as the 4th floor. Absolutely. Yeah. So, and Mr. Chairman and Co-Chairman, yes, again, this is available in all 23 counties. So, and I know I skipped over your question. How can we get this into everyone's hands? Yeah, I don't know that answer. I mean, other than the local counties actually putting this report per parcel out there, but I think that could become a real maintenance nightmare for them, but it is available. So
Representative Lean.
Thank you, Mr. Chairman. Do you have in the CAMA system a list of what would be attributes that is uniformly applied to all of the counties?
So, Mr. Chairman, excuse me, Representative Lean, there's, when you speak of attributes, what exactly are you referring to there?
Mr. Chairman, follow up. For instance, on my property tax profile, it lists an attribute as a wasteland. Is that available to every assessor as 23 counties? Are the attributes that they are using to take away and add value exactly the same across 23 counties within the CAMA system?
Mr. Chairman, so in wasteland, I'm assuming you're an agricultural producer, agricultural property, or is it just land that can't be built upon? I don't know your situation, but
Mr. Chairman, there's a lot of things wrong with my taxes. I'll just start there. I live in a subdivision and they have my taxes broken out into a residential lot as well as residential acreage. I live in the city on a subdivision lot. I do not have residential acreage. That's just the beginning of the breakdown to problems within my taxes. So my question is, as I am looking at profiles from across the state, do I have a list within the CAMA system that the assessors are able to use that says, these are the things that we can add value or take value away from?
Mr. Chairman, no, Representative Lynn, in a single statement, no, there is not a uniform list out there. It's going to vary by county, whether it be an attribute because of view, whether it be an attribute because of a negative aspect to the property. No, that's going to be at the assessor level and at the discretion of the appraiser.
Follow up.
Thank you, Mr. Chairman. The next question that I have is on my property tax profile, it says that I'm being taxed for my appliances. Could you give me a rundown of what that means?
Mr. Chairman, the appliance package, per statute, all property is taxable in the state of Wyoming unless it's specifically exempted. Now, appliances are a little sticky, right? Because some can easily be taken with the property when it's sold, and some can't. So, in my opinion, I would work with your assessor to make sure that it's not personal property, because we know in 3911-105, personal property used for personal use is exempt, right? So there's a specific exemption. But if it's a built-in double oven and you pull it out of the house, I don't think once it's built in like that, I don't think it's probably personal property. It becomes part of the real property. So yes, there are adjustments in Marshall and Swift, and you're welcome to grab the book. But yes, there are adjustments for washers, dryers, stoves, whatever appliance, refrigerator.
Follow up.
Thank you, Mr. Chairman. My next question would be, when I'm looking at property tax profiles from different counties and they vary person to person, it could one sue the state saying that valuation from county to county is not being fair and equitable?
Mr. Chairman, Representative Lynn, I'm not a lawyer. I don't know if they could sue the state or not.
Representative Lean.
Thank you, Mr. Chairman. I want to go back to the statements of consideration that you were talking about in the CAMA system, and you were talking about how those statements of consideration carry all of this data when a home is sold and how it is reported within our CAMA system. The information that is being held from your presentation says that you're putting in all of the cost from that sale into the CAMA system. Last year in testimony during session, so this last session season, we heard that we were not able to have that information from the department because they didn't have that information readily available to them. So my question is, when it comes to a statement of consideration that the assessor is using as one piece of the puzzle to build the assessment value, who's in charge of filling that out and how is it retained in the CAMA system?
That's a great question. And actually, we're going to get to that in appeals too. But to answer that question, Representative, excuse me, Mr. Chairman, sorry, it didn't go through you. Okay, the SOC, it is confidential in the state of Wyoming, and it's held confidentially by the assessor, by the department, by the clerk, by the County Board of Equalization, by the State Board of Equalization, except for those 30 days when a property owner can come in and ask for sales that were used to value or in the analysis to value their property. Is it stored in the CAMA system? The information from the SOC is stored in the CAMA system. Your question, who fills it out? That's going to vary depending upon how the property is sold. I sell property to the chairman, private, don't go through a title company, don't go through a real estate agent. The chairman that I'm selling the property to is going to fill out that statement of consideration. And when that deed is filed, that statement of consideration goes with that deed. If it's a transaction that's typical that goes through a realtor, through a title company, it's probably going to be the realtor or the title company filling out that SOC. I will say in my experience, the statement of consideration, great document. In all honesty, the way it is built, it's a very good document. I can say that most of the time, majority of it is not completed, unfortunately, and that puts the onus then on the assessor to reach out to that buyer to verify that information. So I don't know if I got all of your questions, Representative Lean, but I think I did.
Follow up.
Thank you, Mr. Chairman. Along the completeness lines of the SOCs, if we're not sure exactly who's filling them out, who's responsible for making sure that that gets completed if it is not complete?
Mr. Chairman, if it isn't, typically it's the buyer filling them out. So typically it's going to be the buyer or the buyer's agent or the buyer's closing company, whatever the case may be. Then it's up to the assessor to reach out to that buyer to verify that the information on the SOC is correct and ask additional questions possibly.
Let's go to slide 23.
Let's do it, Mr. Chairman. So the sales module in CAMA, which we already kind of got to just a few minutes ago. This is a screenshot of the sales module. I wanted to show you this sale. This is an actual sale. Now I did wipe pertinent information off of this so that it's not disclosing the sale. But you'll notice that the sales price of this property was $935,000. Notice there was a personal property adjustment on the sale. So personal property went with this sale. So is the sales price for the real property $935,000, or is it $935,000 minus the $15,000? It would be $920,000 for that property. So going on to the next slide, slide 25. We talk about comparables. Comparables are typically something a fee appraiser uses because they go out and they pick just a few comparables, right, to value that subject property or come up with an estimated value of that subject property of what it would sell for if there's a willing seller and a willing buyer. So not something that we generally use in mass appraisal like a fee appraiser. And notice in this comp report, and this is a report that is available statewide in the CAMA system, kind of a neat thing to look at where you have your subject property and then 3 properties that sold within that time period. And you can see what it sold for. What this doesn't do, like a fee appraiser, it does not adjust those comparables. Does not adjust those comparables like a fee appraiser would to match the subject. So it's just a comparison report and not really used in mass appraisal.
Chairman Locke.
Thank you, Mr. Chairman. And so let me be clear. So this particular report isn't making those kind of adjustments. Is that what you're saying? Or because I assume that in the process, those type of adjustments are made in terms of the actual calculation against our property, against the mass appraisal. I'm a little confused by that. So I'm sorry. Just
Absolutely.
looking for clarification. Thank you.
Mr. Chairman. Yeah, great. Well, I guess what I should restate that. I'm saying that this report is not showing the adjustments like a fee appraiser would have done. So this report is showing the actual data as the property sold in that time period. So if you look at comp number 1 as it's labeled, it has 2,215 square feet, has a garage of 836, making no adjustment to match the subject property, even though it's very close to the subject property. But so going on to page 26, we're actually going to get into a little bit more in the weeds, an appraisal in CAMA system. Now, I did not make this a very complicated appraisal. I made it as simple as I could for time constraints, obviously for your time. You'll see here we have a subdivision or neighborhood, however we want to look at it in this case, with 20 lots in it. And it looks like we had multiple sales, and the sales price is below. Is yours in color? Okay, I apologize. In my copy, it's red. So if we look at lot number 1, 250,000 is the value of the property, and 272,300 is the sales price of that property. So any lot that has 2 numbers there, the bottom one is what it's sold for. Okay, and these are fictitious. I've made these sales prices up. So we had multiple parcels sell within this 20 lot neighborhood, if you will. Then on the next page 27, I have arrayed those by the lowest sales ratio to the highest sales ratio. So what is the sales ratio? It is the value divided by the sales price, right? So how close is the value to the sale? You can see on sale lot number 5, we're 88% of the sales price. So the current value is 286. It sold for 325,000. Going all the way down the list to lot 14, it's sold for 255 and we're at 270. So we're 5% above the sales price in that case. Now, our median sales, so now we're getting into the statistical analysis that the assessor must go through to make sure they're in compliance with the State Board of Equalization rules and in compliance with state law. The median of this group of sales, and keep in mind, the median is the exact middle. So if you have an odd number of sales, it's the exact middle sale. If you have an even number of sales, it's the middle 2 added together and divided by 2. And that is your median for that group of sales. Our median is 96.8. Now, a State Board of Equalization requires the assessor to be at a 95 to 105 median sales ratio. Going down, we have a mean that happens to be the same in this case because they are pretty close in value. We have a weighted mean. We have the PRD. Okay, the price related differential we'll get to in just a bit. And then we have a coefficient of dispersion of 3. The PRD for State Board rules must be between a 0.98 and a 1.03. And the COD for residential properties in our example here must be below 15. And that's per the State Board rules.
Represent Chairman Locke.
Thank you, Mr. Chairman. So just real quickly, the current value, if I just want to make sure I understand, is that what the mass appraisal system is kind of calculated. And then, of course, the sales price, that's now being used for this adjustment. Is that accurate description of this data, the way we're looking at it?
Mr. Chairman, that very, very, very close, right? So the value is the appraised value at the time that the assessor valued that property. And then you're right, then he's going to look at the sales now and possibly, in this case, obviously not going to need to make an adjustment. He's already in compliance. Kind of a layup here, honestly, but he's already in compliance with these statistical measures of the State Board of Equalization. So no further adjustment will need to be made in this case. The next page, on page 28, is a sales ratio.
Representative Wolf.
Sorry.
Thank you, Mr. Chairman. Director Gill, you mentioned the PRD and the COD, they have a parameter they have to fall within. I guess the question I have is what happens if it's outside that? And is that something, does it show that there's something that's amiss? I mean, when you say it's got to fall within that parameter, what happens if it's not?
Mr. Chairman, I'm going to defer that question to the State Board of Equalization because that really is that's part of their hat that they wear. I always felt as a county assessor, my report to the State Board of Equalization was my report card. And I would defer that question if it's okay to the State Board of Equalization who is here today.
I will take that up with them.
Okay.
Thank you.
Thank you. Going on to page 28, sales ratio study that comes out of CAMA system. It has nothing to do with the properties that we looked at earlier. Those were fictitious, not in this system, but in this neighborhood, properties that sold, there were 10 properties that sold within this neighborhood. The median is at a 96, the median at a 94, the PRD at a 99, COD at a 5, all within the limits of the state board's rules. Going on to page 29, you'll find those definitions that, we use acronyms all the time in this business. And so I wanted to put those definitions and the measures that the state board is looking at on a yearly basis for all 23 counties. The median is the exact middle. We talked about that. The coefficient of dispersion is how far away everything is from that median. So if everything's kind of grouped around that median, that COD is going to be low. If everything's really far away from that median sale, that COD is going to be high or out of compliance. And then we have the price related differential that shows progressivity and regressivity. So in other words, prejudice in a way in your statistical model. So if it's progressive, it means we're overvaluing high-end properties relative to the low-end properties. So our high-end properties we're way over the top of, and our low-end properties then we're getting those. Let's see, I mixed that up. Sorry. It means it's overvaluing high-end properties relative to the low-end properties. Regressivity means we're undervaluing high-end properties and we're really we're overvaluing the low-end properties. So it just shows it's a test to show whether or not we're being even between the high-end and the low-end properties. The very last page, Mr. Chairman, is the notice of value. I know there was some discussion about the notice of value yesterday. I wanted to put just a sample in here. So obviously this isn't the whole notice of value. The top part is going to be the name, address, etc., all of that information. This is the lower half of the assessment notice. So you notice it's the current year assessment and the residential structure. And it shows the fair value of that level of assessment and the assessed valuation or the taxable valuation. And as we go down the page, it totals those up at 330,414. Assessed value would be 31,389, which is 9.5% of the fair. and the estimated taxes using the previous year's mill levy at 2244. Now, the next lines down are the exemptions as labeled. Homeowner's exemption, 25%. It shows how much assessed value was taken off times the previous year's mill levy gives you the estimated tax savings. Always estimated because the mill levy hasn't been set yet. Then the next one down is residential. That's the residential cap. It took off 570 assessed dollars or 41 tax dollars. And then there's a subtotal of both of those exemptions added together and then subtracted from the estimate full tax to the taxes owed. So in this case, here you can see that this property owner with the 25% and the 4% cap saved 564 tax dollars or 7,888 assessed dollars. And with that, Mr. Chairman, I will mention there is one more report in CAMA that I totally neglected to put in this, but I did send it to the chairman this morning. And it's a report that helps explain the exemptions. So, and I apologize, I did not, and I can send that to the whole committee or you can forward it if you wish.
Representative Lean.
Thank you, Mr. Chairman. Thank you for that on the CAMA system. My question is now about your notice of assessment. There is a line on here about the previous year's numbers. My question is, how does that communicate from the assessor's office to the treasurer's office? What programming are we using to make sure that those numbers are uniform across the platform?
Mr. Chairman, great question. So on this notice of assessment, what number are you referring to, if you could?
Mr. Chairman, I'm looking at my current notice of assessment from my assessor's office, and there's a line that says tax valuation, and it's from the previous year, previous year property breakdown. And then you can compare that to your prior years. So my question is, what program are we using to communicate that? Because I know that number comes from the treasurer's office where they're collecting the taxes versus the assessor's office who's doing the assessment.
Right, Mr. Chairman, thank you, Representative, for clarifying that. That number comes from our CAMA system. So not to get really deep in the weeds, but there's lots of buckets, if you will, especially with all of these exemptions and multiple exemptions on the same exact property, the house in many cases. So we know what number needs to be provided to the treasurer, and that is done in tax roll. And we talked about tax roll very briefly earlier, but that's one of the processes. So tax calendar, and I'm simplify this, the assessor must have the notices of value out by the fourth Monday in April or soon thereafter. Then the state board certifies values in June, and they have to have their abstract to the state board on June 1. Then the first Monday in August, the commissioners must set the mill levies. And that's because all the budgeting entities have gotten their budgets turned in, right? So the first Monday in August, the commissioners set those levies. The third Monday in August, the assessor must turn over the tax roll to the treasurer. And I forgot a step in between there. In between that, the assessor is also filling out the mill levy report for the State Board of Equalization by August 10th. Third Monday in August, we turn over the tax roll to the treasurer. And by October 10th, the treasurer must send those tax bills. So those numbers are all in that tax roll. And we know which field. Each time an exemption is applied, I try to make this as simple as I can. You have the full raw value, okay? Raw. Then you apply the cap. Now you have a netted, and I'm going to call that net, the net value. And then you apply the 25%. I'm going to call that the net value. So when we supply that tax roll to the treasurer, we're going to supply that net value. So in order to make sure she's collecting the correct amount.
Follow-up.
Thank you for the timeline adjustment and the name of the program that you're using. If a person has a tax value that doesn't match on the fair value, how would they appeal that? Because that's not necessarily appealable within the CAMA process appeal center. So where is the appeal process for those that have a discrepancy between the fair value that is communicated from the assessor to the treasurer?
So, Mr. Chairman, in your scenario, I'm assuming the 30 days has already passed, right? They've gone through the appeal period or didn't go through the appeal period. And what you're saying is somehow a mistake was made and inadvertently put on the tax roll. And what is the taxpayer remedy on that? Mr. Chairman, I don't know that answer right off the top of my head. Unfortunately, I will find that out. I am sure there is a remedy in statute for that. In my experience, I never had that happen. The correct value was sent to the treasurer. So I have seen times where it went all the way to tax roll and a house was double assessed. I mean, that has happened, right? It was picked up on this lot and this lot. And when we got to tax roll, then of course the assessor is going to make a tax roll correction in that case. So maybe that is the answer. Maybe the assessor, if the wrong amount went to the treasurer, the assessor would make a tax roll correction.
Chairman Long.
Thank you, Mr. Chairman. Just a few questions. Kind of one of them is in terms of, if I understand this right, just in terms of the assessment value. So I'm going to try to summarize. I know you went through in a lot of detail, but summarize. So we start with replacement value. Well, first, let me back up. So you talked about the fact that you validate the data, the Marshall and Swift data. You go through that process. So you're validating the data that you're putting into your system against the books. Is that accurate? So you're not validating, for lack of a better term, that the data is right. You're just making sure that it's accurate with the books. Is that correct?
Mr. Chairman, that is correct. We're making sure that the cost tables loaded in the CAMA system match the cost tables that we're purchasing from Marshall and Swift.
Follow up.
Thank you, Mr. Chairman. And I'm sorry, I've got a few series just to kind of walk me through this. So just in an attempt to summarize the process. So correct me where I get it wrong, but you obviously went through in a lot of detail, but in that process, you go through, you put all of the data in there. There's lots of adjustments and variations and those kinds of things. But ultimately what is happening is that initial value calculation is replacement value new minus depreciation. That's kind of the initial value of that. Is that accurate?
Mr. Chairman, that is accurate. So all of those characteristics are gathered. So you saw the characteristics, like Representative Lean asked about the bathrooms or someone asked about the bathrooms. All of that characteristics are part of that replacement cost new. Then we apply depreciation.
Thank you.
Follow up.
Thank you, Mr. Chairman. And again, I'm sorry, but this is just a string to make sure this is clear in my head. So that's when you then use the sales comparables. We'll just use that term if that's the right term or wrong term, to then make the adjustments based on that. That is then added onto that. Added is the wrong word. Used to adjust that initial value. Does that, for the most part, at a very high level summarize the process?
Mr. Chairman, yeah, it does for most properties, probably not every property, but it starts with replacement cost new, less depreciation, and then it is adjusted for sales. That adjustment could be up, it could be down. I mean, it could be either way.
Thank you.
Follow up.
Thank you, Mr. Chairman. Sorry. So hopefully I'm getting close to the last one, but I apologize. This is just me getting a clear picture. How much, this is one of those things that happened. We all saw this happen at COVID, where the replacement value, probably that's when this really surfaced. The replacement value, all of a sudden, a lot of us were looking at material prices and half of us couldn't have replaced our own home, to be perfectly honest with you. That's probably not true for everyone, but I'm sure it's true for many, that you could have replaced your own home because we saw materials shoot up. And that being said, how much has that, in your opinion, I mean, maybe I'm asking a bad question and I get that because I'm asking to get an opinion, but how much has that affected the process? Because one could argue that statistically speaking, if you shoot the price up here and then you start using sales prices to bring it down, one could argue that you never get back down to this number, if you know what I'm saying. And that's the part that I just wanted to, I just would like to hear your opinion and thoughts on that in general. How much did that COVID spike affect our prices, our assessed values? I guess I should really say. Thank you.
Mr. Chairman, so lots of questions in there, obviously, but great observation on that. I mean, yes, we did see the cost of replacement go up during that time period. Yes. And so keeping in mind, we're adjusting that replacement cost new less depreciation for sales in an area, right? So as that replacement cost new went up, more than likely that adjustment that we were doing for sales probably went down. Now where the sales price is higher, I think it's more important that to look at not that the material was higher, but the sales prices were higher. Had nothing to do with the material cost. It had to do with supply and demand at that point in time. So I think it will equal it. It would equal it out that market adjustment will come down as this RC and LD goes up, depending on the sales, of course.
Follow up?
Thank you, Mr. Chairman. So that's where this is an interesting, and I saw this phenomenon, many people in my district, in my area, where they would purchase a house. Let's say they bought their house in October or November, for what one would argue. I would argue it was an arm's length transaction. For lack of a better term, it was a fair transaction. And then their assessment the next year, so within X months, was immediately 30% higher. Now, is that because, in your mind, is that because other sales prices were that much higher? Or is that being driven largely by that increase in replacement cost new? I'm kind of curious because I didn't see this once or twice. We saw this very repetitive where I had numerous people who that was their biggest concern was, wait a minute, in November, I bought my house for, I'll just use a number of 300,000, and it was, assessed at 400,000 5 months, or when they got their notice 5 months later or whatever it was. That was a disturbing phenomenon, and one that's obviously very hard to put your finger on what's causing that. So your thoughts are appreciated.
Yeah, Mr. Chairman. Yeah, I don't think it was caused by the replacement cost new less depreciation, the RC and LD. It was caused by sales. And maybe that person just got a deal at that point in time, but other sales were driving that.
Representative Lean.
Thank you, Mr. Chairman. When I'm looking at my property tax profile, I notice on here that there is an effective age of my home, which does not match the actual age of my home. Could you address how that changes the value in the CAMA system?
Mr. Chairman, effective age is an appraisal tool that adjusts for, we have, I guess the best way to address that, we have homes that are well over 100 years old, right? But they still have utility. They're still being lived in. The electricity has been replaced, the electrical components, the plumbing's been replaced. What effective age does is adjust anything that has happened to that property that's changed in that property, adjust that age to make it more, to show that it has longer life left than typically a house. Most frame houses have a lifespan, according to the cost manuals, of around 55, 60 years, right? We know houses last longer than that, but they won't last longer than that if you don't do something to them. So that effective age basically changes the remaining life of that property.
Follow up.
Thank you, Mr. Chairman. Also, in that same area, there is a percentage remodeled. The percentage remodeled says 0. However, there has been a remodel done to my home in the recent 5 years, but it is put in a different place. By putting it in an alternative place on my CAMA system, is that raising the value of the taxes versus putting it where it should be under percent remodeled to help with the effective age of the home?
Mr. Chairman, I'm not sure of your exact situation. I'm not sure where it's being put, but is it changing is where the percentage is put, changing the calculation, I can't answer that without actually sitting down, and we could talk offline and look at it. Absolutely.
Follow up.
Thank you, Mr. Chairman. One more for you is, I hear you talk about updating the CAMA system, that it's essentially a living document as we're changing laws. They are updating it constantly to match Wyoming laws. Is there a way that the department makes sure that the version of the CAMA system being used is the version the same across all 23 counties?
Great question, Mr. Chairman. Yes, it is. On a daily basis, our TSG, our technical service group, they monitor all 23 county CAMA systems, actually 24, because I have one sitting on my desk also. So they monitor all CAMA systems to make sure that they're on the same version. They have the same cost tables. Any control tables that the department has control of, they are the same statewide uniformly.
Follow up.
Thank you, Mr. Chairman. My next question would be about industrial. So we see these property tax profiles for residential taxes, and I know that the CAMA system also addresses some industrial things. Does the CAMA system carry a property profile in a sense of whether it's the same name or a different name for the industrial partners as well?
Mr. Chairman, industrial partners. So I guess that's going to vary, Representative Lynn. Just thinking about it, let's say it's a steel manufacturer, okay, and the assessors measured the property, et cetera, et cetera. Yes, a property profile I think is available for that property. Now, when you speak of industrial, I'm guessing maybe you might be speaking to oil and gas equipment. I don't know that there's a property profile really available for personal property. I'm not positive. I've never run one, but I think there is.
Senator Wright.
Thank you, Mr. Chairman. On these notice of value statements, they typically have last year's value, and then they do the new assessment, and they break it out with land, structure, but last year's value doesn't show that breakout on the statement. So you always have to go back and dig through the files and figure out, was it the land that went up? Was it the structure that went up? Why is that obfuscated, so to speak? Thank you, Mr. Chairman.
Mr. Chairman, it's in statute that the previous year's value has to be there. It doesn't say it's broken out. Choice made probably decades ago that they just combine that value. Yeah, why it's not split out, I'm not positive. I could look into that, but I'd have to look into that statutory language. But I know that the prior year's value has to be on the assessment notice, but it doesn't say it's broken out. Now, what does have to be broken out is the improvements and the land currently.
Follow up.
So if you could look at that in statute, I'd like to see that statute changed if it was, so we can see the breakdown from the previous year. That would be good to know how that decision was made and what that statute was. If you could let me know that. Thank you, Mr. Chairman.
Chairman Locke.
Thank you, Mr. Chairman. Just a real quick one. We'd kind of talked briefly about the comparables, and that one particular report didn't, for lack of a better term, break those comparables down the way that would be done for the assessment of the actual property value. So just given a sort of a simple scenario, I just looked at some of this data for my property, for example, and many of the comparables were arguably not comparables. Now, I say that loosely from this perspective. They were far larger properties than mine, for example. So when you, at first brush, you take a look at that and you go, oh, well, that's not a comparable to my property, but that's what's being used to value the property. I know as you went through this, you probably covered that at some level, but Can you talk to that in a little more detail, just so I understand how that is then used to function in a comparable mode? Because that's the part that when you pour through all this data
Mhm.
is a bit obfuscated, and I'd like to understand that just to be a little bit more clear.
Mr. Chairman, that is great. And no, I did not go over that. And that is, I'm so glad you asked that question. So you go in, you don't agree with your value of your property, right? You agree that the value is wrong, and they show you the list of sales that were used in your area for the valuation of that property. Keep in mind, we started with the cost approach. So the characteristics alone will stand for themselves. So, in other words, you have a small house, 1,000 square foot, right? 2 bathrooms, no basement, etc. Right next door, you have a very large house, 10,000 square feet, 10 bathrooms, full basement, basketball court in the basement, right? Okay, cost approach. They're already far away from one another, right? So now, even if they're right next door to each other, the sales in that area are going to show us what we need to adjust up or down based on the sales. And we're going to do that same for this one, same for this one. And we're going to adjust them, and they're going to stay at that proportion away from each other. So because we started with the cost approach, we now have the characteristics standing alone, because you expect that 10,000 square foot house with 10 bathrooms and a basketball court in the basement to be valued higher in a replacement cost new than that 1,000 square foot house.
Follow up.
Thank you, Mr. Chairman. So what you're basically saying, so those comparables are basically you're comparing them against the cost approach already applied to those specific properties, and then using that percentage difference as the neighborhood adjustment, or that might be the wrong term, but for lack of a better term, the thing that would adjust the entire neighborhood in this way. But it's that calculation is against the cost basis for that specific property. Is that right?
Mr. Chairman, that in a nutshell, that is correct.
Thank you.
I have a quick question. It seems to me that the 10,000 square foot house with a basketball court might appreciate at a different rate than the 1,000 square foot with 2 bathrooms. So the person in the 1,000 square foot house is almost being penalized. It is how I'm looking at it. Can you help me with that?
Yeah, Mr. Chairman, that's a great question. I just used that as an example to show that the cost approach keeps those away from one another. I don't think that happens a lot. It could, but, and yes, maybe this one is appreciating. I don't know that. We'd have to look at the analysis, and the sales would show us that. Maybe in that neighborhood, we have other 10,000 square foot homes that are selling, and maybe they should be in their own neighborhood versus the 1,000 square foot neighborhood. That's up to the assessor to do that stratification to make sure. My example was really to show the co-chairman that because we start with that cost approach, it does keep them away from each other.
Representative Stivar.
Thank you, Mr. Chairman. Question I've got is like on the notice of assessment, it has the last year's taxes on it. But if you look at your tax bill, they're different numbers. One's 2,264 and the unpaid taxes for 1,861. Why the discrepancy between the tax bill and the assessment?
And that's exactly how much difference?
2,264 to 1,861.
Okay, yeah, Mr. Chairman, I think I can explain that very, very easily. On the assessment notice, last year's taxes include the veterans exemption. And because the veterans exemption, yes, as the taxpayer, you're not paying that those monies, the state's paying them. So the tax liability is still being paid. So that's the difference. More than likely, last year's taxes is the full tax amount, the amount the taxpayer paid and the amount the state paid. Because that veterans exemption is still getting distributed like the taxes that the taxpayer paid. So that will be the difference.
Thanks.
I have one other quick question. Why, if we have a 4% residential cap, does the value each year go up way more than 4%? Why wouldn't that number just be the 4% increase? I think that would make it easier for us to understand it.
Mr. Chairman, great question. So we're going to value it at full fair market value first, right? And then we're going to apply that cap. So just to give you an idea, in 2024, after the cap on the residential structure passed the legislature, 60% of the homeowners out there paid at full fair market value because their house did not go up over 4%. 40% paid at 4%, higher than the previous year. So 40% didn't pay at fair market value, 60% did.
Representative Lean.
Thank you, Mr. Chairman. Now I'm going to switch gears to chapter 7 of your rules that come into the department. In chapter 7, section 6, we're talking about the cost approach to value, which we're using for assessment values. In here, it says that there's the replacement cost, the production cost, and the historical cost, and they're under section 2, ABC. And when you put those all together, we're coming up with the assessed value. But I'm having a hard time connecting that to fair market value or full value. And there's a difference between those two, but that's a totally different question. So how can you help me connect how the replacement cost, the reproduction cost, and the historical cost tie into the fair market value of an assessment for taxes?
Mr. Chairman, Representative, I'm going to have to get back to you on that and look at that chapter of rules. I don't have those with me, but I'm going to get back to you on that if that's okay.
Representative Walk.
Thank you, Mr. Chairman. One thing, and I don't think we torture everybody in this room with this answer to this question, but I would be curious to understand how depreciation at some point, if you can maybe give me, I might ask you for that offline, maybe for the committee. I don't know if the committee's interested, but I'd be curious how depreciation is applied. That's one of those numbers you see it on, we see it in some of the reports we get. But the question is, how does that work on a house? And I'm just curious. And again, I don't mean to torture this room with a explanation of that in detail.
Okay.
Thank you.
Mr. Chairman, I can get to that for you, Co-Chairman.
Thank you.
Mr. Chairman,
Yes, sir.
Matt Sachet, Interim Director of the Department of Revenue. Representative Lean had a couple of questions I'd just like to follow up on, if that's okay. The beginning question, sir, was about confidentiality. The confidentiality statutes are in each chapter, depending on if we're talking sales use, minerals or property, but for property taxes, they're located in 39-13-102Q. And it specifically identifies who can be given data. It's quite limited. Department of Revenue, Department of Audit, the governor's staff, the Craig Group can be given this information. There is an exception that says that any government entity may be provided the information if they show a need, which I assume this body would definitely have a need. But what it does is requires us to notify each and every taxpayer that their information is being provided. So if you were wanting the obsolescence numbers, we would need to identify each and every company that are using those obsolescence numbers to notify them before we could provide them to you. And we take it very seriously in the Department of Revenue. This is the only statute in which I can go to jail. So I really take it seriously.
Real quick. I think for our purpose, we don't necessarily need the names of every company. What we're looking for is the total amount of taxes we're not collecting due to obsolescence.
We could look into that, absolutely. If all you're wanting is a combined number of everything, we can definitely look into that.
Follow up?
Thank you, Mr. Chairman. Would you just restate the statute for me?
Yes, sorry, Mr. Chairman, Representative. It's 39-13-102Q. It's in the administration confidentiality section, and it's way down there, kind of buried. Welcome. Mr. Chairman, the second question I'd like to talk about was the appeal rights. The Taxpayer Bill of Rights, as well as each chapter within the statutes that govern us, allows that any taxpayer who feels aggrieved by a final administrative decision may appeal that decision. And that governs all of the government. So this does not just include the numbers. I noticed that Representative Lean was looking at her bill while she was doing this, not just the numbers, but if you were to get a written decision by the department for something, you may appeal that. It's a final administrative action. So, and this is not hard to do. It may have to go to a different location. We've had appeals go to the Board of Equalization, go to the district court directly. We've had various appeals, but it's honestly not hard to do. I remember 21 years ago, I was in a meeting with a taxpayer, very large company, and we were at dinner and having a discussion about what we had found. And he wrote on his cocktail napkin, "We appeal," and put it across. We explained to me that I explained to him that that wasn't sufficient, but that napkin got attached to the appeal, and the appeal date started at that napkin. So it's very easily done. They accept everything. We take it very seriously. We take the Taxpayer Bill of Rights very seriously at the department. That's all I have. Any questions?
Chairman Locke.
Thank you, Mr. Chairman. So just for clarification, that appeal right is for any ruling. So at any step along the way, you can appeal at that ruling, post that ruling point within X amount of time. Is that correct?
Mr. Chairman, that is correct. It's any final administrative decision. So it's not necessarily a number or whatever. It's whatever the administrative decision is that we made. And it's any taxpayer that feels aggrieved. So as long as you feel aggrieved and it's a final administrative decision, you may appeal that.
Representative Lean.
Thank you, Mr. Chairman. Thank you for bringing a statute to me. And at this time, I'd like to make a formal request that we get those reports from you and that we can start the notification process and whatever that takes.
Mr. Chairman, that'd be fine. Write that down, Ken.
Got it.
Senator Hyde.
Thank you, Mr. Chairman. I just wanted to comment on Representative Lean's. Just put that on a cocktail napkin and you'll be okay.
Okay, at this time, I think we'll take about a 10, 11-minute break. We will start back up at 11:30. Let's reconvene. I think we're gonna vary a little bit for the first part of this, going into the appeals process. A lot of the information that Department of Revenue provided is duplicate of what you guys want to do. So we'll let you start with the questions that you were sent. Introduce yourselves and tell us what you want us to know.
Thank you, Mr. Chairman, Mr. Co-Chairman, members of the committee. It's nice to see a revenue committee again. We thought, I'm here with Marty Hartzog, who's the vice chairman. I'm Jane Mockler. I'm the chairman of the Board of Equalization. I thought maybe first we would tell you who we are and what our background is so that you have some confidence that we're capable of being the Board of Equalization. I currently serve as the chairman. We rotate it between the three members. We're missing a member. So if you have any great ideas, let the governor know. We still need to get a new member appointed. They're 6-year terms, they're statutory and they're staggered. So that kind of gives you some continuity on the board. I've been on the board for 12 years. You just reconfirmed me in the Senate for an additional 6, but not sure I have 6 years left in me. Before that, I was in the legislature for 16 years. I was on the House Revenue Committee for 4 and the House Appropriations Committee for 2. And then on the Senate Revenue Committee for 12 and the Senate Appropriations Committee for 4. And then on the Capital Finance, which we created when we realized we had to work on the investments of the state a little bit more. So I did that as well. And in addition to that, I am the state employees representative on the Wyoming Retirement Board. So I'm a trustee of the Wyoming Retirement System as well. So you can kind of get a sense from that. I like money. As a member of the board, as I said, we transferred the chairmanship. So I'm currently the chairman, and now I'll let the vice chairman give you an idea who he is.
Good morning, Mr. Chairman, Mr. Co-Chairman, members of the committee. Just a little background. I'm an attorney, 4 years of private practice with Hathaway, Spate and Coons right there in Cheyenne. I joined the Attorney General's office in 1998, Civil Division. Worked on everything from construction law to administrative appeals, but a lot of revenue. Represented the Department of Revenue in front of this committee and in district court and Wyoming Supreme Court. Lots of mineral tax cases, sales tax cases. I became the section supervisor, and then eventually I worked up to be the deputy. But along the way, it's important to know that I got to work a lot with the revenue and the mineral committees over the years, helping draft legislation, helping resolve issues, testifying all the time to explain some of the complexities, especially mineral tax, but also worked on some of the others, construction areas, procurement, all of the different things. And really the civil division of the Attorney General's office is 1/5, but it handled a vast majority of the legislation. It advised the governor, of course, on every single bill that came within its purview. But it also worked with the different agencies, and oftentimes with individual legislators who really needed to understand a problem and to figure out a solution. So I had lots of experience working with the legislature. It's my pleasure to be here today. Then I was appointed by Governor Meade. It's tough to find board members because of the complexity of some of the cases. The mineral stuff especially, it's a fairly heady area of law, lots of money and fairly aggressive litigators on some of those big sour gas, coal types of cases. And so I've been here 10 years, hit 10 years in March, and I'm not sure where I'm going to go after this. I could make it to the end of the governor's term. I have, I think, another 4 years, but with that, I want to just answer a quick question on statements of consideration. Representative Lean, you asked, I believe, how is it enforced? And to supplement Mr. Gill's testimony, it's really the clerk. And understand the statement of consideration is not part of the tax code. It's referenced in the tax code, but it's part of the real estate code, Title 34. And the leverage that you have given the clerks is, I mean, you all, if you have property and you work in real estate, you know that the most important thing that you do after you purchase property is what? I mean, the banks are going to be insisting that you record that title. The title insurance company absolutely wants to make sure you record title because it's they're liable if something happens and they don't do it right. And so when that title, that transfer document's presented for recording, that's really the word, it's recorded in the public record so that your title and ownership is made a matter of public record. The clerk then is required to receive that statement of consideration and to make sure it's complete. Now, different clerks may view that job differently. Some are probably better at being more demanding as to getting that information and others. But it is the clerk, they're the gatekeeper, and they're the ones that are primarily at work under Title 34. And then the assessors come and get that information from the clerk's office. And then it's on the assessors to go back and check the information to figure out really what happened. 5 years ago, we came before this board, we had a problem with SOCs. We had some professionals out there advising that their clients just claim an exemption and not file it, which was a problem because it's really just a tool. It's just the information from the purchaser to the county officials to the assessor. Just that's really the only purpose of that statement of consideration, to get the detail of the sale from the purchaser and the new owner to the taxing authority. And so we went to the legislature and tried to get some changes. We even suggested maybe getting rid of the exemptions and making it less confidential. Of course, we didn't succeed there. The legislature wanted to maintain the confidentiality of the statements of consideration, but we were able to clean it up a little. I provided a copy of what we did back in 2020. And you'll see that the highlighted information really, it just ensures that the assessors get the contact information. If you're not going to give the all of the data, and most do, but even if you're going to claim an exemption, the assessor has to have your number and your name and some way of contacting you, the new purchaser or the new owner, and getting that information. That's really what we accomplished back in 2020. And before we move on to the next area of interest, the appeal process, I'll stop there and ask if you have any other questions about statements of consideration. They really are pretty straightforward. And in terms of whether you want to maintain the confidentiality of them, the states are all different. Some don't make them confidential. Others, such as Texas, very confidential. You can't get them. So.
Representative Lean.
Thank you, Mr. Chairman. Thank you for coming today. My question about the statement of considerations is how many, this may be for the department, how many homes in the CAMA system currently have full statement of considerations, like complete statement of considerations?
Mr. Director, Representative Lean, I certainly don't know that, and understand that most of those statements of consideration stay with the county. They're not all given to the department. If the department had been the repository for all statements of consideration, that would be quite a collection. But boy, I don't know. I have no idea what the answer to that is.
Chairman Locke.
Thank you. And so in terms of, so like I've talked with the title companies, for example, and if you ask one of them, I asked, hey, is this document sufficient to make sure that all of the things that are changing that affect the sale are there? At least the title companies I've talked to, their interpretation of that is yes. So that's what they've told me. I've had 2 or 3 of them say, absolutely. If the statement of consideration is fully completed, it's very thorough. But that is a question that I would ask of you guys. And then I think that we will further ask of other people at the title company, because I think that's one of the things that we would like to make sure that the statement of consideration is fully covering for us, to where a sales transaction and all of the nuances associated with that transaction are fully covered. And here's why I bring this up. And you may not have these numbers, and this might be something we should ask of the department, or maybe we even need to ask further. But we've heard on many occasions that people who submit, that the number of, let's call it valid sales. Now, I know on the statement of consideration, there are certain sales that I think you can check a block that says it's not a valid sale. So my interpretation of that it's not arm's length, if you will, but I could be wrong on that interpretation. But that being said, but we have heard over the last 2 or 3 years that the number of valid sales is, there was 100 sales, but only 10 of them were considered valid. I'm throwing out just general numbers. So at least from my perspective, for us to do this properly and for us to really be looking at how we make sure people's houses are assessed, that number of valid sales has to go up. So I guess that's my question to you guys. How do we do that? What changes do we need to make to say, are there enhancements to this form that would make it better? What enhancements to the process? I guess that's the real ask of your organization. What can we do to work with you to help make that better? That's the question of the day. Because I don't want to say, hey, there were 100 sales and 10 of them were perceived as valid. And I have literally heard that a dozen times over the last 3 years in interim meetings and in meetings in session, that the number of sales to do those estimates on is not where we would like it to be. Again, I'm going back to the interpretation of fair market value in the statute, right? In statute 39. We want that to be as robust as possible. And this process has to be, for lack of a better term, almost bulletproof to do that. So I'm sorry that was a long ask, and maybe too long, but that's where we're looking for help from you. Where do we improve the form itself, the processes around the form? In terms of, we probably aren't looking to turn this into a full disclosure, but the question is, are there variations to the disclosure that would enhance how our government entities can make sure they can get the right data? So I'm sorry it was a very broad question, but I wanted you to at least understand what I'm looking for help, or at least me, I'm looking for help on, and I won't speak for the entire committee, but that's where I'm at least.
Mr. Chairman, you're probably going to struggle with my answer. The form itself is very simple, and I had Eve send you a link to it which is our form. It's been there forever and it's changed very little. The form is very basic. It really doesn't include very much information, hardly at all. It's the people in the transaction, how much it was sold for, what kind of property it is. Really, that's it in a nutshell. The key is the contact information. So if we were going to try to make it far more demanding and make people sit down and really line out everything about it, I think there would be a lot of difficulties in getting people to do that. Would be quite a deal. That would take a lot of pressure off the assessors, because they do that on the back end. They go to the purchaser, they go and look at the property, they go and make sure that their account information is consistent. And so that's really where all of that work occurs on the back end. And the exemptions claim it's not necessarily non-arm's length. It can be an interfamily deal. It can be a convenient formal transfer, a corporate deal where there's not really a transfer between two parties. It can be a foreclosure. I mean, it may be that the property was not on the market for very long. There's so many reasons why a sale will be invalidated, but the exemptions are fairly broad. There are quite a few of them. So it's not always just a non-arm's length deal. Any kind of distress sale would probably remove that sale from consideration as a valid sale on the back end with the assessor looking at it. But the exemptions themselves are pretty basic. And again, one of the reasons we came to the legislature 5 years ago was because it was being, I don't want to say, we were told that it was being used inappropriately, just claiming it so they didn't have to file the information. Let's see the other question. So getting back to your overall concern about valid sales. Yeah, there are a lot of reasons why assessors invalidate sales. And Mr. Gill is the person to talk about that. The Department of Revenue has a list of reasons built into their analysis. And we've been very aggressively asking assessors if they're overusing some of those invalidating triggers, because we feel that more sales should be included. But there are a number of interesting twists and turns and complexities that start to skew the information one way or the other. And there's a good reason that the assessors will invalidate a sale. And then of course you have some counties that they have so few sales. I mean, we have a few counties that literally have 20 sales in a year for the whole county. I mean, just nothing. And so they have, referring back to Mr. Gill's testimony, you've got to go back years. You've got to do a lot of things creatively to try to get a sense of the market, to see where things are going. And so that's been part of the challenge.
Mr. Chairman, could I follow up just a little bit? I know it's been referenced that the Board of Equalization does the abstract review, and I don't know that you guys all know what that means for us. It means that beginning the second week of June, we meet with every single county assessor. They go through their entire process for how they came up with the values for their county. We have a statistician on our staff who works with them all year long to make sure that they're in compliance with our rules, that their COD is in compliance, their PRD. He now adds another layer of a PRB, which is just to go in a little bit more detail. He has the median, the mean. We look at all of those numbers. We ask them if they're out of compliance. Why are they out of compliance? Sometimes they have a legitimate reason, like they had 10 sales and it's impossible, or really difficult in the state is to commercial property. There really are not a lot of sales of commercial property. So they're not in compliance with that, but they then have to tell us what their process was to get as close to compliance as it is. And then I noticed in the discussions yesterday, there are ramifications. If you're out of compliance with our rules, we don't immediately go to anything like an equalization. We work with the assessors. We say, why is it that there are so many invalidated sales in your county? And we put them on a work plan where they have to come back the next year and show us what changes they made that'll improve that. So when they look at, they've invalidated 50 sales out of 100, we really do see that. We see that, and we know over time that that was maybe an anomaly that year and that they're on track generally. If they're not, then we can go back and say, okay, you have to be on a work plan. We have assessors that have been on work plans because they haven't made the 6-year review, that, they just can't get them done in 6 years. We have assessors that are on work plans because they use number 9, which is all the invalidations, too often. So we see all of those numbers. We see when they're falling out of compliance. We see when it makes a difference for us to say, with soft hand, kind of look at it. Or we have a next step, which is an order from the board to actually work with the department on a monthly basis to get the information so they can see and assure us that the sales are being validated, that they're getting into the system correctly. We've had a couple counties that have been on some pretty serious work orders over the last few years. And it does start to turn around. And I think, it's not a perfect process in the sense it doesn't turn around the next year. It's about cleaning up sales files. It's about getting out and seeing the properties that sometimes haven't been seen in 10, 15 years because they're isolated. Going forward, I think the department and most of the assessors will tell you that having the Eagle View flyover is an amazing asset for them because they can see a property and see that the barn that was there last year isn't there this year, because the only other way they'd know that is to go out there, and chances are that the barn burned down 5 minutes after they did their 6-year review. They wouldn't be back out there for 6 years. But the Eagle View allows them to tell them that information. So they see all of that. They can then come to us and tell us, that their sales data is clean. They've seen the property, whatever issue we had with them that they can address. So that's kind of what we do in the abstracts. We have we have two components. One is, are you meeting our Chapter 5 rules, data numbers? And secondly, we ask them very specific questions, you know, of concerns we have statewide. And a lot of them have come up here because, you know, we all get our tax bills too and our tax assessments. So we ask, you know, what's going on in your county? What happened in your county that so dramatically changed 2024 from 2023? And they can tell us that because as they've mentioned, these people are on the ground every day. They're calling the zoning people, they get building permits, they peek on Zillow. So when you tell them that your basement isn't finished, but all of a sudden it is on Zillow, you do have to explain that. I mean, there's a lot of information and a lot of ways to do that, but we ask them about it. We have, you know, probably 3 pages of questions that they have to tell us. Why is this number out? Why is their sales ratios different? You know, so there is a lot of final check before we approve the abstract and give them the value that they can take to their county commissioners. So maybe that kind of cleared up what our role in this process is.
Follow up?
Thank you. That was actually very helpful. And I actually appreciate your response to the fact that, because when I looked at the form, it looked a little, I would argue, oversimplified. I had a couple of, like I said, I had a handful of title companies say, oh, well, we can fully document the sale. But I guess I would argue that I think it's an area at least worth considering and looking at and saying, is there a way to enhance that? I don't think it's not an overnight enhancement. I totally get it. But it's a procedural change that I think is worth considering. That being said, and kind of going back to the valid versus the invalid sales, and thank you for the clarification, because I had an oversimplified view of it, and I really appreciate the extra detail. But that being said, I guess I would ask, are those, I realize that reporting specific sales information to us is bad, but for example, are the number of valid versus non-valid sales, is that data reportable? Is that something we could get fairly easily without too much trouble? That's one question I certainly would ask. And so I just wanted to throw that thought out there. Is that kind of data available? And the second thing is, so let's just say that sales data, if I assume that this is true, and I guess I'm asking that if it's tagged as an invalid sale, does that mean it is not used in that as a comp, if you will? So again, my terms may be wrong, but if it's an invalid sale, is it not used as a comparable? Is that accurate to say, or am I misinterpreting that? Thank you.
Well, that would be up to the assessor. So let's go back to your first question. The data is all available. On our website, you've seen the reports that we put on our website, and they're not the metadata. They're kind of the overview data. But at any point in time, I don't think any of it's confidential. I mean, nothing we do is confidential really, except for the statement of consideration. You can get it, but I think you'd have to maybe talk to us individually and see specifically what you want. I mean, because it's not confidential information, it's just a lot of information. And with respect to the sales, that's part of when you look at the various counties. We'll have counties that use every single sale, even though the county next to them would have made it an invalid sale. I mean, that's kind of a discretion of the assessor. Do they, when they don't get enough sales to make some comparable, they use them in their analysis, but they use them differently. Each of them use them differently, but they have to be able to tell us that we had 47 sales, but I only found 7 of them were valid, but I saw what the other numbers were. And that's a lot of the discretion of the assessor and the extrapolation and the time trending and all of the things that they do to make sure that they've got kind of current numbers for what's going on with the sales in their county. And it especially is true in commercial property.
So, and if I may just add, more specifically, it is still usable for certain purposes. Like we look at the difference between the properties sold and the properties that aren't unsold, how the valuations move. It's called sales chasing. We don't want them just looking at the sold properties and hammering them, and all the unsold properties kind of lag. And so a lot of those sales can be used, that data can still be used for certain purposes, but on the comparable side, it probably won't be used depending on what the problem is with the sale. And understand, this is something that Jane hasn't mentioned, but it's so important. We look at all of these statistics on a countywide basis. Just that's got to sink in. We're looking at four levels of property, commercial vacant, and vacant residential and residential vacant for all the way across. And we're developing a statistical analysis for each one countywide. And so, I mean, we can look at each LEA, but there are lots of little ups and downs when you look at it countywide. And there's that, as Jane was mentioning, there's so much data. If we tried to look at every LEA, some counties have 50, 60 LEAs and four different groupings for each LEA. So it can be quite voluminous in terms of how much data we're dealing with, but that's the statistical overview that we achieve at the end of our abstract process. We make sure that they're within or we're dealing with their nonconformity in those four property gradations. Okay.
Mr. Chairman, and just to add to that, we also look at the stratification. You know, you talked about stratification earlier so that we can see the neighborhoods and how they're stratified and what the deviations are. So there's just an amazing amount of data. But what I would maybe suggest is that beginning, I think on the 16th, we'll start the abstract hearings. And if you're in Cheyenne, you certainly are welcome to come watch or listen and be a part of, observe one of the abstract hearings. Or you can get in touch with us and we can tell you when your county's is. And you can call in and be on the phone, while we go through the abstract for your county. And they're done by Zoom. So you link into the Zoom, you don't see the Zoom, but all the data for that county is on screen. And you can see how we go through each of the statistics for each of the four areas, and get a sense of what's maybe kind of wonky in your county or just statewide to see, I think Representative Lean had a question or a concern about equality statewide. And that's what the overall view that we look at. We're, as Marty always says, the 35,000 foot level people who come down and make sure that statewide the system is the same, that they're using the same data, they're using the same numbers, they're using the same statistics. And we're looking at those and saying, yes, you are. But, sometimes we do find counties that are just a little bit out of whack. And that's when you look, because they're relative even not to the statistics, but just to the other counties. But I would encourage you, if you're interested in I wouldn't listen to all 23 if I were you, but because we ask the same questions 23 times, we have them memorized by the end. I would encourage you to sit through an abstract hearing, either for your county or for just a county that you have some questions about.
Representative Wharf.
Thank you, Chairman. So you mentioned that the meetings are there. Are they recorded where you can go online to the legislators, or how do you find them? Are you under the legislators? I know you can go find all the legislative meetings that are held. I'm assuming since it's Zoomed, it's recorded.
Mr. Chairman, they are recorded, Representative Wharf. However, they're not online. You would simply just call us and say, I'd like to listen to Laramie County's abstract hearings for the last 5 years. And our statistician who records them and keeps all the data for all of the abstracts can send you the recordings for those years, or currently this year, they'll be recorded. So they're all recorded.
Thank you, Mr. Chairman. Follow
Follow
up. I think you answered the question about the COD and the PRD, because it sounds like me that you've got some type of a confidence interval is what you're looking at. What is that confidence interval that you're holding that at? Do you know?
Okay, now I have to remember.
Mr. Chairman, Representative Wharf. So for all of the four categories, our statistician does a full statistical breakdown arriving each of those. And so, for instance, the COD, coefficient of distribution, measures the uniformity. And what Mr. Gill was talking about is if you've got that nice tight cluster, that means everything in that grouping or countywide is valued fairly consistently and tied to market value, and all the sales data and relative to the values are bringing them in a nice cluster. The farther more of the outliers you have, the larger that COD. And we have a different COD versus for commercial versus residential, but for residential, I believe it's 15. And so if it's 15 or below, you're in compliance, and that means we've got a nice narrow range. If you had to scatter plot of all the sales relative to their values on that chart. And so it's a big statistical formula. And then we perform one for appraisal accuracy or the appraisal quotient, and that's how close are we getting all the values to market. And that's where Mr. Gill said you have to be between 0.95 and 1.05. That means if you took your hypothetical perfect market value across all of the properties in that category, most of them are going to fall within that 10% range above or beyond. Most of them hover around 95%. Then we have the PRD, which measures the difference between how lower level or lower valued properties relative to higher valued properties. Is there a bias? Is one being treated preferentially statistically? And we can measure that out too. And then we also look at, like I said, we look for sales chasing, which is, are we valuing sold properties relative to unsold properties? And are their values relative to those sales? Are they all within a certain percentage, usually 5%? Those are the 4 that we perform for each of the 4 categories countywide. And that we do oftentimes pull some individual sales or individual valuations that look really strange. And usually we find out that the assessor made a mistake and that it's not a problem. It's just reported as a problem. They didn't get that there was something added to the property, and so it's their data that needs to be cleaned up. But as Ms. Mockler said, when we have had issues with a county assessor, and sometimes for Natrona, for instance, we had 4 assessors in 6 years and one passed away. We had lots of turnover and they were arguably understaffed. And so we had a problem, and we had to issue an order to really light a fire under them. Same thing happened in Teton County before Melissa Mishinkle. And it really almost came to a head, and her predecessor left the office, but he was undervaluing properties and getting pressure from his constituents and I mean, obviously it was quite a deal. But for most of our assessors, we issue work orders and work with them because we don't want to, we want to work and collaborate with them, and then only when it's clear that we're going to continue to see a problem do we ratchet it up to the next level, a public order indicating the problem and saying this is what you're going to do. And then I call it the nuclear option would be an equalization. We literally would go in, basically take over the office and use what their resources in the department to go in and fix it hands-on. That I've never done. I probably hasn't been done for more than, and it was very limited, but that's quite we probably have to have police protection if we did that. That would be something.
Mr. Chairman, could I follow up, and it kind of goes to your question about fair market value but when we were talking about the 95 to 105 level of assessment, one would be that you caught every house on the day it was sold and every house was, perfect, which is why that number is 95 to 100, to 105. And most counties come in probably at about 97 or 98. So they're not reaching full value. So, as a county, most counties come in around there. Some counties, like when Ken was assessor, they're right at 1. And, but very few even come over 1. They get to 1. They don't want to be at 101 and 102 and 103. So they come in as closely as possible to 1, but 95% of them are not at that full 1%.
And then if we can keep going with our abstract process, or we can move on to the appeal process, or we can talk more about statements of consideration if you'd like.
Move on. Let's move on to the appeals process.
Mr. Chairman, we got a couple of questions about it, but I think you probably need to ask us what your concerns are, because we have 2 appeal processes. Remember, we do the appeals of the property tax, but we also do sales and use tax and other state taxes.
State assessed.
State assessed properties. Liquor licenses. I mean, there's a lot in what is the appeal process. But I think Mr. Gill made it very clear that every decision that is a final decision, administrative decision of the state is appealable. So if you're appealed your property tax and you get a decision from your county board, that's a final decision of that board. It comes to us. We make a decision that is a final decision of our board, which is appealable to the district court. And then again, the district court is appealable to the Supreme Court. So there is always an opportunity for an aggrieved taxpayer to continue the appeal process till they get to the Supreme Court. A couple of years ago, probably about 8 years ago, we were able to work with the committee and with the county commissioners, and we rewrote the rules for the appeal process and made them consistent between the OAH, the Office of Administrative Hearings, and our county boards, so that taxpayers can see that there's a consistency in how you can appeal. And I think that came, and maybe Senator French remembers doing appeals, but it came about because they were being done differently. So we standardized that about 8 years ago, I think. And we haven't had any concerns in terms of the process for the appeals. So I guess maybe you'll need to ask us, kind of what your concerns in the appeal process are.
I think what I want to do is take this up after lunch for the questions and give people a chance for public comment on what we've done so far. Is that amenable to you?
Fine.
No. I'll do some public comment. Do we have anyone in the room that wants to make public comment?
Chairmen, senators, representatives, my name's Ken Johnston, and I have property in Platte County as well as Laramie County. And I have listened to the statements here, and no offense, but there was a lot of Barbra Streisand that was going on, in my opinion. Number one, it's not a simple process to appeal any of this. I've been through the process and it's still in it. I'm now at the Supreme Court with one of my cases starting over 2 years ago. It started because the assessor assessed my property at a particular value. I went in and talked to him, and he said, no, it's going to stay. So I filed the appeal. After I filed the appeal, the assessor came back and reduced it by about $60-some thousand, and then turned around and added $3,000 to that after that. I've went through the appeal process at the County Board of Equalization, and then it went to the State Board of Equalization. State sent it back because they thought I was appealing the original $700 and some odd thousand they were assessing my home. The county board thought I was appealing the lesser one. Didn't make any difference to me. All of them were still way too high as I saw the whole situation. And so it went back to the county. The county then turned around, said, well, yeah, we all agreed that this was what was being appealed, sent it back up, and it was rubber stamped. Didn't have any discussion as to what transpired below. And as part of the discussion, I had said, and one of the comments I heard earlier, you can't get the price of the property sold. That's baloney, folks. I contacted my realtor, provided homes in my local area that I used as comps for what should have been on my property valuation. These county boards said, well, that's not appropriate. Well, I have since found that they only use CAMA determination as your comp. Excuse me? 2 homes in my neighborhood, one was 2 down from me and one was a catty corner across the street from me. Within the CAMA came up with $20,000 more for each one of those as a comp, because they give you, when you appeal this, they give you a form that has all of the comps that were supposedly used, or at least within that considered in your neighborhood. I looked at it and I walked down and talked to the neighbors that had the property purchased laid out. And they were way off. $20,000 for each one of these that I used as a comp, and the county board said it's not appropriate to use that. And I have since appealed another one, and that's when I found out that they use the CAMA system as your comps. That's not right, folks. Now, I'm going to, continue. I then filed the appeal from the State Board of Equalization to the district court. District court stamped it and said that the Supreme Court will determine it from whatever you had at the beginning. And so I'm at this Supreme Court of Wyoming at this, right this now. But it's not a simple process as that attorney seemed to indicate here. It's far from that. Now, fortunately, I can pay the taxes, but that's not the question. I can give you an example. I purchased some property in California as rental property quite a few years ago. And you pay your taxes based on the sale price. It was an arm's length transaction, and that's what they taxed me on. And they increased the taxes by 3% every year. Now, I'll tell you, California doesn't do hardly anything right, but that's one of them they did. And so it doesn't change unless you sell. When I sold it, the new property owner, had to pay the increase in value on their taxes. We should have something like that. And the fact that they say you can't get this information, that's hogwash. I asked my realtor, as I said, and I got that information provided to me so I could have it for the hearing on that. Different than what the county used. And not only that, the assessor had used property that weren't even, I have a 2-level home in Cheyenne, and they provided ranch homes as comparables, with one comp as being a 2-story. How's that comparable? If you've ever done anything in the building area, you know that a ranch is a lot more expensive to build than it is for a 2-story. You only got one roof on the thing. So it's a real problem, folks, as to how this whole system works. The CAMA system is not a decent system. It screws everybody equally, sort of. Yeah. And I'm serious, it does. The whole thing that came down with COVID was a real problem for everybody. I bought my home there in Cheyenne at $365,000. The following January, I think it was, that I got the notice of assessment, it was $175,000 more. Holy cows, property's really gone up in value. I didn't know what they were doing. And I bought my home at an arm's length transaction. Went through a realtor. They had it. I didn't know the buyer, and they didn't know, or the seller, and they didn't know me. And so that's how it should go. That's how you can make this whole system work. You don't have to have, 100,000 people working in the assessor's office to determine whether or not a piece of property is what you can assess it for. Bill them based on the sales price. Only thing you have to determine is whether it's a arm's length transaction. I was sitting here listening to the gentleman before saying, well, we got some 20 some homes that were sold and only 7 of them were valid. I have a really, really hard time believing that. No offense to the gentleman, but as long as it's an arm's length transaction. Now, if I sold the property to my wife to get a low price, that don't count. If I sell it to my son, that doesn't count, or any other relative. But that's easily determined, folks. We can, if you utilize strictly the sale price on this, you'll get more money. I was driving up this morning from Wheatland, And I was listening to the radio and they're talking about Teton was moaning and groaning that they're going to have to increase the percentage on these taxes there for the property. If they ran strictly on the value of the property, they wouldn't have that problem. Because you got billionaires buying out millionaires and all those pieces of property is going up every time it sells. The value of the property gets assessed at a higher price on that. So as I said, the system as testified to, it's not simple. Unless you want to say it's simple because when you go through the process, well, of course, the assessor was correct. Yeah. If you read the statute, it says what fair market value is. It's what you as the buyer is willing to pay me and I'm willing to accept as a seller. That's it, folks. It isn't this garbage in the CAMA system. There is nothing. And I can tell you, most folks would never consider buying what the CAMA system said that property's worth. I know because I have two houses next to me that they sold for $20,000 less than what the CAMA system said it was on that. The only thing confidential about it is they have you sign a little form when they give you all of the CAMA evaluations. So you can't go out and talk to somebody about these CAMA evaluations. So how does that have to do any of this? I don't see it. So I'd be happy to answer any questions, but I came down here because this is a really sad situation that we have for our homeowners. Yeah, I'm only talking residential, you know, that I've never been involved in the commercial stuff, but the residential goes to everybody. Yeah, I assume everyone up here, if you're a homeowner, you've seen what your taxes have been.
Representative or Chairman Locke.
Thank you, Mr. Chairman, and Mr. Johnson, thank you for coming up and giving your testimony. I really do appreciate it. So real quickly, just two things, because it sounds like one of them was one of the issues I had brought up. So you bought your house and the very next assessment, it was assessed 100 and you bought it at, let's just say 400,000, some range. I'm sorry, I didn't get the number exact, but literally within the next assessment, it went up over $100,000.
That is correct.
And then my next question was, so you went to your real estate agent, got comparables that you looked at and you said, yep, that's comparable to my house. Real estate agent clearly thought that. Those were not considered valid in the appeals process?
That is correct.
Thank you.
And what I understand from talking, because I've appealed twice now, the last one I just finally said, I'm tired. You know, folks, I'm 82 years old and I can't keep this up for too much longer, you know. But so anyway, after the county board ruled on it, I didn't go any further on that. But at that time, they told me that they used as a comparables is a CAMA determination, not what the real property value sold for. So you're even with what you have there, you're not getting a fair deal with the assessor. And as I said, it'd be really simple. And it's not hard to get this information. If somebody thinks that it's all confidential out there and you can't find out, you tell me what you got, I can find out what you paid for it. I can guarantee. And it's not because I'm doing something illegal. I just ask my realtor, say, hey, I need to know what the prices are around here, and they can get that for me. So if they can get that, our assessors, all they need at the assessor's office is what it sold for, and was it an arm's length transaction? That's really what it is, folks. And, you know, I'm asking you folks to make some changes so that we really have a fair system, you know, on the thing. You know, if I bought my house in the particular area there in Cheyenne, you know, because I was hoping to live there the rest of my life. If they keep going as it is, I'm fortunate right now I can still pay for it, but it keeps going up and keeps going up and keeps going up. And if you look at it from one other perspective, if you go in and I've done a lot of homework, not this kind of homework, but building homework in years past. I can do electrical, I can do plumbing, I can do, you know, all this other, can't do the texturing and stuff like that. But I can go in and do that. And if I built a home doing all that myself, They would go in with this CAMA system and they would come up with at least a couple $100,000 more than what I put into the house because they're going to say, I'm worth that much to do this. And, you know, folks do a lot of this stuff on their own because they can save some dollar. They don't have to use a system here that says, oh, well, we're going to use this dollar because Joe over here charges $100 an hour to do this kind of work. Folks, that's not right. It really isn't. I appreciate the opportunity to be here today and speak to you.
I have
hope you
a
take it
quick
in.
question for you, sir.
Sure.
When you got the comparables from the real estate agent,
Yes.
were the sales anywhere close to what the CAMA system said?
No,
Or was there
they were
great
20,000
variance?
off.
Okay. Thank you. Representative.
Thank you, Mr. Chairman. Thank you for coming today.
Yeah.
My question is, when you went to do your board, the county board, were you aware of who would be sitting on that board when you went into that appeals process?
Not really. I probably could have found out, but I didn't know at the time. I was very much of a neophyte when it came to the appeal. I had some property in other state before I moved here, and I'd appealed some tax stuff, and you know, it was a relatively simple process. But you know, and I'll give you an idea why I'm sort of really upset on this one, because when I first went into the assessor's office and he said, nope, I'm not going to make a change. I made the change. I filed the appeal. At the hearing, I asked him why they made the change. The assessor said, well, I took a closer look. Excuse me? You took a closer look and reduced it by 60-some thousand dollars? That's a big thing. I know the case law, because I've had to read a lot of this stuff for the state, says assessors have to be considered whatever they've done as being correct unless you can show what they did was either inappropriate or wasn't done right. Well, I showed that, but because that appeal was not considered as the same as from the $700-some thousand charge down to the 600 and something was not the original appeal, because that's once the assessor changed it, you have to do the appeal process again. You aware of that? If they make a change to that appeal, you have to then reappeal it. They didn't even know it. I didn't know it. And so the state board then, when they took a look at it and said, well, we're only looking at this one little appeal with regard to this amount, they didn't consider the fact that the assessor took a second look at it or another look at it. Not right, folks. It just isn't right.
Senator Hyde.
Thank you, Mr. Chairman. Thank you, Mr. Johnson, for being here. It's good to hear people out there coming and testifying in front of us, because I feel like you in front of my county assessor as well, too. And I think there's a lot of people, a lot of my constituents, you know, that are working that can't show up. And I would have to agree with you that the status quo needs a lot of work. I don't know if you were here yesterday or not, but we talked about, you know, maybe looking at a different system. So I just want you to know that we're on the same page with you, and it is complicated and it's not simple. So thank you, Mr. Chairman.
I appreciate that. I really do. You know, so anyone else I can answer any questions for? No. Thank you very much.
Well, thank you for coming in.
Yeah, my dog and I'll head back to Wheatland.
Do we have anyone online?
Yes, sir. We have two people online, and we'll start with Ross Schriftman. I'll admit him now, Mr. Chairman. And he is online.
Just fixing it up.
They admitted Ross Schriftman.
Mr. Schriftman, you are able to talk whenever you're ready.
Hello,
Hey, Mark.
Ross.
Okay.
Committee, can you hear me?
We
Can you hear me?
can.
Okay, great. Well, thank you very much for your time and thank you for having this hearing. My name is Ross Schriftman. I live in Casper, citizen in Casper. I've been here 4 years. A little bit of background. Back in 1974, way back when, I ran for the Pennsylvania State House, Pennsylvania General Assembly. My main issue was getting rid of property taxes. There's two problems with property taxes. First of all, I like systems that are based on the ability to pay. Your residential home, and for most people, does not produce income. It produces expenses. It's where you live. Since I've been in Casper 4 years ago, my taxes for property have gone up 70%. Thank you for the work that the committee has done and the other members on Senate File 69. So now my increase over the last 4 years is going to be 30%. Besides the problem that the property taxes do not produce, or residential property in most cases don't produce income, there's another problem too. And I listened this morning to the discussion on the CAMA program, numerous calculations to get to that point. Other taxes, for instance, we pay federal income tax. It's paid to an actual number, how much you earned. When you make a sale or you buy something and the merchant has to send the money to the state, it's based on an actual number. I looked up the word assess, and the synonyms for that are measure, evaluate, judge, weigh, and calculate. It's a very complicated system. And I appreciate yesterday Senator Ide, who is my senator, bringing up the idea to look into other methods of taxation. I know the last two sessions, both the previous budget session as well as the recent legislative session, there were either bills or amendments to change to more of a sales tax approach. There wasn't obviously enough time to really look into all the modifications and considerations, and I'm glad that the interim committee is working on this at this time. So I appreciate the time to do this. I also was wondering if maybe Department of Revenue has the numbers of the reduction in revenue that the municipalities will be getting for fiscal 26, because I get different numbers here in Casper, and I'm not sure exactly what the reduction in revenue to the city will be. And one other point, I circulated petition for the ballot question for the constitutional change that's going to be in the ballot in January or November of 26. Of the 250 neighbors that I visited, all but 5 signed that petition to exempt 50% of our values for real estate taxes. And I know this afternoon you're going to be talking about Amendment A. That was promoted as a way to lower taxes for properties. That was not what that amendment did. It just simply separated residential from the other property taxes. So I'd be glad to answer any questions you have. And I know I'm holding up lunch. So thank you.
Thank you for your testimony. I think we're hungry.
Okay. I gotta go cut my lawn. Have a great afternoon.
Thank you.
Mr. Chairman, the next person online is Patrick Sweeney, and I will admit him now.
I'm gonna go back and forth in the room and online, so nobody thinks that I'm picking on anyone.
Sounds good, Mr. Chairman.
Mr. Chairman, Mark Jennings, I am a partially rehabilitated where you guys are sitting on the political part. So I want to point out a couple of things.
There's rehabilitation from this?
There is, you get to mow your yard more often. And it has not been totally satisfying, but it has some blessings. So I have a couple of things that that I'd like to point out. On the appeal process, when they go through that, and it was not always this way, years ago, the county commissioners were not the county board of equalization. And that lends itself to its own conflict of interest. The county commissioners are the ones that are going to spend the money. And so there is a conflict inside of that. Secondly, that's not on them from this standpoint that they're not trained in this system. You can talk to almost all of them, and there's very, very few that really understand the CAMA system at all. And I've heard experts give testimony that have said the CAMA system really doesn't function in Wyoming because we don't have enough cells. It's that simple. We're 580,000 people. And so it lends itself to its own problems. I would point out something else, moving on to a little bit more towards the reform notion. Mr. Johnson, it was very good to see a citizen here. It's very disappointing and has been disheartening to me, having sat where you guys sat, although you've got a new venue. Citizens don't show up near as much. You look in this room behind me, I think every one of them is a lobbyist, a political hack, or a political person, one way or another. That's not demeaning to them. They're doing their job. The citizens are out there working to pay these taxes. That's why they're not here. I felt compelled because I've been on this issue for a number of years, as long as most of you have been on this committee or in this committee or in the legislature. And she's now 85-year-old neighbor lady. I was visited by her and a second neighbor. And there, it was actually heartrending. The second lady is probably in her early 80s. They're both retired. They cannot keep up with not just the taxes that they pay directly, but the indirectly. These two ladies live a little ways around the corner from me, and they live in a mobile home park. And every time that something has happened, they've raised those rates. They brought me a letter saying these people, well, our taxes went up, therefore we went up another $50. They're now paying $625 for a lot rent. And there are people in Sheridan that are now over 800. We always claim as a government we want to work towards affordable housing. Looks to me like we're working against affordable housing. Mobile homes are a good entry level place, and they're also a good place to retire. And I would ask you to look out for the people that you represent. Those are the people. And this current system does not function. I said, these people are out working, taking on second jobs. This 84-year-old, when she was 84, she went back to waitressing tables. Now think about that for a second. That's despicable. So it's just so that we can have more people to spend on more money on more government programs. I understand inflation's hit. I understand it's difficult times. You look in most counties or you look in the state, in our coffers, we have some pretty good savings. We took it from other people's savings. And so I would ask you to look at reform, real reform. And with that, I'd take any questions because I know that lunch is coming up and 5 minutes over. And I can see Representative Stivar starving down there.
He'll be fine.
Yeah.
I want to make a statement more than a question. As we look at Amendment A and what that was aimed at this afternoon, it actually does the opposite if we split the properties out. Because the people renting the properties, their taxes are going to go up. So lot rent's going to go up, payments are going to go up, rentals are going to go up. We're almost at a point now where it's just about as cheap to buy a house as rent an apartment, especially in this community. So I'll be interested to hear what we do with that. But it certainly wasn't a tax break. Chairman Locke.
Thank you, Mr. Chairman, and thank you, Mr. Jennings, for coming in. I actually appreciate the fact that you made the most critical point of all, which is our focus needs to be on the people and the impact of the people. I often say that there's two different types of legislators. There's the legislators that believe protecting Wyoming is protecting the government. There's the other kind that believe protecting Wyoming is protecting the people. And at the end of the day, usually when we talk about, oh no, it's going to cost us more in government, we don't take the time to look and say, wait a minute. I'm going to use the term everybody hates me for using, but the impact of the kitchen table, right? We keep forgetting the impact of the kitchen table. And unfortunately, sooner or later, it's a death spiral. This is just one man's opinion and an opportunity to bring it up. And that's why I appreciate you bringing up the critical nature of us looking out for the people, because sooner or later, we run out of runway. And when these people start losing their properties and doing those kinds of things, we create a situation that's much worse. And we need to take this opportunity to turn it around and really truly implement true reform. So thank you for that. I know that it was more of a comment than anything else, but thank you for bringing up the critical nature of the people and the fact that when we start talking about, oh, wait a minute, a county budget or a city budget was cut by a little bit by some money. Wait a minute, the kitchen tables that you serve was probably cut by that much or more. And that's where I think we really need to make sure our focus is.
And Mr. Chairman, if I can address back to that. Another point that occurs to the people at the kitchen table, this guy was 82 that came and testified. He's still fighting at 82. My neighbor ladies at 80, 85 and 80 something, they're fighting something. You're seeing apathy because they come to a place where you bet the county clerks, they understand the CAMA system. They're willing to explain a part of it, but at 82, pretty soon people are worn out. They're tired of fighting every time and I'll just take it back to the County Board of Equalizations. They have a vested interest in backing that assessor up. You'll see it's almost always, very seldom does the person win. Very seldom. And they wear the people down. I think you would see more people here. Most of them are out making a living. Like I said, my neighbor lady's back to waiting tables. It shouldn't be that way. Not in Wyoming and not in America.
One more public comment, I guess. Having witnessed 2 or 3 different appeals that finally made it to district court, you as a taxpayer have 30 days and that's it. And you go see the assessor who's represented by the county attorney or has an attorney hired for him. And then state county board of equalization has an attorney. You go in there and just get chewed up unless you hire an attorney. Now you're paying for both those attorneys who are fighting against you through your taxes. And now you got to go hire another attorney. Well, we're going to dig into that this afternoon too. We have 2 more online.
Yes, sir. And Patrick Sweeney has been admitted, and then we'll have Cindy Barlow as well.
Okay.
Thank you, Mr. Chairman. Pat Sweeney from Casper. So great discussion this morning, and in what little I was able to tune in yesterday, but I take a opposite opinion on the County Board of Equalization. We tried to pass a couple of, as Representative Jennings will remember, we had a working group that Senator Case was also on at the time, on trying to do more things that the County Board of Equalization could take care of before it went to the State Board of Equalization. And in my opinion, the State Board of Equalization has got, it's very difficult for the average citizen, which has been brought up before, to get to the State Board of Equalization. And it wasn't, I think we had, Senator Ide might remember, I think there was over 4,000 appeals just a few years ago here in Natrona County. And so I truly believed our county commissioners that were seated at that time had to learn about the CAMA system, and it had to, we had a lot of disputes on the LEAs at the time. So I think if we could just go, if the committee could just go back and look at some of those working notes, in your next testimony, Cindy was part, I got her included on the working group. She's got a ton of good information, in my opinion. And I think if the committee could take a look at that issue to give our county commissioners, the County Board of Equalization, more authority to do some adjustments. And I know the State Board of Equalization will argue they already have it. I disagree. And that's why we were looking at that previous committee. And please don't take offense, but your cities and counties and municipalities through the mill levy and special districts still need dollars from the property tax to survive. And so to give you an example, and Representative Lean has done a lot of research on this, and is trying to help one of our special districts, Natrona County Fire in particular. But I'll give you an example. We just got set up a new senior district in Natrona County. And I believe Fremont also in this last election was able to pass one or two special districts for seniors. According to the numbers, it takes a year plus to work on these things. So our preliminary number calculation on 1 mil was approximately between 1.7 and 1.8 million. So what in actuality the calculation today is, and part of the problem that Mr. Schriftman alluded to from the Casper numbers, we still don't have an exact number on the 50% long-term homeowner or long-term property taxpayer. We don't have that final number yet, but I think what I've been told towards the beginning of July or the end of June, we'll have the final number and calculations. But that district now will only, on 1 mil, will only collect 1,085,000. So down some, at minimum 700,000 from where we once thought. let alone a fire district, weed and pest. It all accumulates together. We're estimating in our best information from our county assessor, who's doing a great job. In our previous assessor did as good a job under the circumstances as possible. But quite honestly, the number that she was able to provide to the city of Casper was between the 25% and the 50% long-term homeowner. City of Casper's down about 1.8 million. So in the budget process, obviously the cities and counties, which was alluded to by Mr. Jennings, former Representative Jennings, our best people are the County Commissioners Association and Wyoming Association of Municipalities. To working together, lobbyists are not a bad thing. And they're really the technical experts. So, but with that, thank you, Mr. Chairman, for allowing me to speak remotely, and appreciate your time. But bottom line, take a look and listen to Cindy. Hopefully she'll bring some ideas up also, and to help our county boards of equalization. Thank you, Mr. Chairman.
Thank you. Questions? Representative Lean.
Thank you, Mr. Chairman. Thank you. Is he still there? And thank you for being there, Mr. Sweeney, today. My question is about the 1.8 million. I just want to verify with you that the just over 200,000 of that is a mineral reduction in the property tax value, but not necessarily what the legislature did. Is that correct?
That's my understanding also. Thank you, Representative Lean. Mineral devaluation in the county.
Let's bring in the next one.
Mr. Chairman, Cindy Barlow is now online.
Welcome to Revenue.
Ms. Barlow, it appears you are still muted.
Doggone it, and I was doing a good job. Okay, Mr. Chairman, Mr. Co-Chair, thank you very much today for this opportunity to speak to the committee. I know we're all at the bottom of an empty stomach, so I'm going to make my comments pointed and clear. I want to bring up a decision that was made in 1995. It was the Jan Charles Gray decision, and it actually went all the way to the Supreme Court. And this decision really caused a lot of issues with the overall ability to be able to dispute whether your land value was correct to that of the improvement value. And the reason for that is that decision from the Supreme Court said, we don't care what the numbers are in the middle. We only care that that bottom number at the end that you're assessed for is the price that your home would sell for. Therefore, it made it really hard to dispute those numbers in the middle. So for example, like the trend that we're seeing right now in the assessment process, where it is almost systemic that land is being adjusted up to attest for that lack of value that they have, somewhere in their accounts. So, I mean, not to pick on assessors, but by appraisal approach, it's really hard for a taxpayer to come in and say, listen, my land isn't worth 500,000 and my house worth 20. Now that's an extreme example, but those are the things that we're seeing is the disparity in land to improvement. And because of that decision, it only matters what that end number is. So imagine being a taxpayer trying to appeal what the assessor came up with. As a person who has helped in Natrona County and as well as in Teton County and many other counties across the state to help the taxpayer understand how to even appeal, I can tell you that requesting that data, depending on the county that you're in, is very tough. I know that you guys can hear all day long that you can ask for the data, but I will tell you, as a former assessor, knowing the rights, understanding the statutes, I have made requests for SOCs and was denied and had to come back a couple times to be able to get it. Once receiving SOCs, I can tell you that the information was blacked out on buyers and sellers. How does a taxpayer verify what the assessor has if they wish to contact it? I mean, it's up to them to prove that the assessor was wrong within 30 days, yet the assessor has an entire year to work this data. That's not fair. So when you look at the amount of documents needed to be able to successfully appeal, if you don't know to ask for the SOCs, if you don't know that it's your right to be able to receive those documents, the normal taxpayer is just going to say, well, here I am. And then they're going to be thrown out on their nose and will not be able to rightfully be heard on their assessment. So I can tell you, as much as the documents are there, if you don't know what to ask for, it will not be provided, and nor will they be guided to anything helpful. One of the things that I think this body should look at is that the property profiles that the offices put together are wonderful. And it's data that helps you to understand what is being assessed on your property. It allows the taxpayer to productively work with their assessor and say, gosh, we have this wrong. What else can we do to, make this work? So that's something that we need to look at and consider. And I've actually guided people to go and request that and to request it of the properties that their property is being compared to, because are they adequate? You've got to have the information to know. The other thing that's really important and something that I found compelling this year, and even in previous years, let's talk previous first. When I requested the analysis that the assessor used in the Excel format, they would not provide it to me. Now, I will tell you, one county was absolutely fabulous. We were able to work together. We actually found where that formula broke and we were able to fix it. But here's something that should cause all of you pause. The person I was working with got their property tax fixed. The other people that were in that entire LEA, unless they appealed, they didn't see the same relief. That entire LEA was not adjusted, only the person who had appealed. That should cause enormous concern for all of us listening, I feel, to my testimony on that. The other thing is about the Excel document. We need to be able to have these documents in the format that the assessor created them in. So if you created a document in Excel, it should not be provided in a PDF. I have gone through appeals before where the County Board of Equalization said, well, this analysis, Ms. Barlow, that you have presented to us is not the same document that the assessor used, so we won't accept it. So I have found personally and first-handed, I know that you have to have the document that the assessor used to be able to impute this data into the CAMA system. So it's important that you guys know that as a taxpayer, if we don't know to ask that, we won't get the information. The other thing that was interesting to me this year is I did my own and looked at my own data, and I was provided that information. I had found where there were exponential errors in that data, as well as I could not replicate the sales price that was used in the CAMA system. And I also seen that the approach to come up to a land value was actually looked at. If you had 5 sales, let's say they're all 100,000 each, and that in number with five sales at 100,000 is 500,000. Instead of looking at how many acres we were looking at to come up to a price per acre, they used the number of sales that they had to divide that final number. Now I'm simplifying it, but that means that each parcel would be worth 100,000. When in fact you had 43.5 acres, the way that it worked out in the data was that that land should be valued at about $9,300 per acre, versus in this case it was 78,000. That's a big difference. And that should cause pause to all of us here today. The other thing that I really believe this board needs to consider is the fact that I know that our sales are confidential information, but when you as a taxpayer are threatened with a misdemeanor as though you are going to do something wrong, when just as that dear gentleman testified earlier that he can get the data from just about any realtor, and so can I. Why is it that a taxpayer is up against a misdemeanor? And quite frankly, when you can prove, and we have proven in the past, that the error was to the side of the assessor, your county commissioners are, as a county board of equalization, they're bridled. And Pat Sweeney was correct on that. They do not feel as though that they have the right to make any kind of decision. And frankly, you guys, they need further education to be able to make decisions. And I'm going to say that in support of the assessor or the taxpayer, because if they don't understand the appraisal process, it becomes a personal opinion. And so therefore, training is truly imperative for our county commissioners. I will also tell you that about 4 years ago, maybe even 5 years ago now, Pat Sweeney was a part of that, as well as Mark Jennings and others in the room today, that I pushed an initiative on the statute of 3913-109, the taxpayer remedies. It is not clear. It is not simple. It is not easy for the taxpayer to understand what needs to actually just be a request and how they approach this. When in 30 days, the taxpayers of Wyoming have to prove their case in front of a county board of equalization. And as again, that dear gentleman testified, if you cannot use realtor information that was derived from the market, that has adequate information of which the assessors use, and they look at Zillow as well, then what are they to use? And if that is not valid information to use in their appeal, what is their remedy? Other than like today, you guys are hearing a story that you've heard now for 6 years solid that I know of. And nothing really collectively has changed. All of the taxpayer remedies as far as tax relief has been phenomenal, and I commend you guys for moving that forward. Ultimately, I look at this and say there's a lot of opportunities to improve this. The opportunity to improve that 3913-109 was literally kiboshed before it ever went to a committee. I sat in a Zoom meeting with the County Board of Equalization, the Assessors Association, a quorum of the Revenue Committee and me representing taxpayers of Wyoming, or myself as a citizen and others, but I was the only one that was there, and the information was basically shut down. So it tells me that we're very reluctant to look at change in Wyoming. You've heard it from your constituents. You've all ran on it as campaign promises. We really need to look at a time of reform. We need property tax. We need to have that one thing that is available for revenue. I get it. But may we do business smart? We're looking at a lot of different opportunities today to be able to improve that. Our CAMA system is, in fact, a very intricate, smart data set that can do almost anything. We've got good people working in it, but the system itself is broken as far as an appeal process. And I would argue that most people have true due process being provided to them with the information needed to appeal. So I've said plenty. I open it up for any questions that you guys have of me.
Representative Wharf.
Thank you, Mr. Chairman. Cindy, you mentioned a couple times the 30-day time period. You've been involved in a lot of appeals. What do you think is the appropriate amount of time? Because it sounds like from your testimony that 30 days is insufficient. Is 60 days more in line with what you think the time allotted should be, or 90 days? Give me an idea, please, what you think that should be.
Mr. Chairman, Mr. Co-Chair, and Representative Wharf, I would say that the 30 days is adequate if, and the great big caveat is if the taxpayer can receive the documents that by law are provided to them at the time of request. The CAMA system, if it's used properly, can produce these reports with the press of a button. So if the taxpayer can get it timely, I've heard times when I've had instances where I've had to go back multiple times. Time is of the essence. You are started by the date that assessment schedule or notice of value is printed. 30 days is, you also have a very tight tax calendar. 30 days can be adequate if the documents that they use to create this assessment is presented to the taxpayer. Is it hard on them? The answer is yes.
Follow-up. So, Cindy, what you're saying, it sounds like to me, is the clock starts the minute I go say I'm going to appeal, but it's still under the assessor's control as far as what information and how timely that information is disseminated to the individual requesting it. Is there maybe something that should be put in statute or rule that says a time frame that they have to provide information once it's requested?
Mr. Chairman, Mr. Co-Chair, and Representative Wharf, the statute's clear. The assessor shall provide. Maybe there should be a provision put in the statutes that the assessor is going to have the same misdemeanor popped on them if they don't present the information that's needed equally to the taxpayer. No, I think we complicate things. Keep 3913-109, clarify it, because and ultimately it already says the assessor shall. So maybe the department needs to come down and say, you guys need to provide. Representative Wharf, I don't have a good answer for that, but the statute does address it. The assessors should comply. And some of them are fabulous. Others are absolutely terrible.
Thank you.
I have a quick question for you. If somebody files an appeal, that can take months to make its way through the system. Are they basically taken off the tax rolls or treated differently during that time? And then the computations are done later after the appeal's over? Thank you.
Mr. Chairman, I'm sorry to ask you to repeat that question. I just got the request to start my video. Could you ask that again?
Yes, ma'am. Once somebody files for an appeal, that process can take months. And as one guy testified today, 2 years. Is that properly kind of held in limbo for that time frame until the computations and the appeals are done?
That, Mr.
Thank you.
Chairman, thank you for the question. And that assessment year is held in limbo. The treasurer actually, if any tax has been paid, puts it into an escrow, or at least that's the way it's supposed to happen. But yes, that property tax is in limbo. And a good example of that, let's pop to industry really quick, where when we have these great big appeals, those property taxes, and this causes a big deal, are held in escrow. And then let's say they go bankrupt. We had that situation in Johnson County. And guess what happened? State's the first lien, but the money was lost. So there's actually two sides to that, Mr. Chair.
Thank you, Senator Ide.
Thank you, Mr. Chairman. Ms. Barlow, just want to send kudos out for all of the time you contribute to this committee pro bono, essentially, as someone that's, worked behind the curtain at the assessor's office. We really appreciate that. And also thanks for the awareness of the land value situation this year. I can attest to that. I'm not saying anything's nefarious about it, but I own commercial parking lots. The improvements are just the asphalt on the top. That didn't really change, but I had anywhere from 40% to 98% increase on parking lots this year. So thanks for the heads up and bringing that to everybody's attention. Thank you, Mr. Chairman.
Mr. Chairman, can I respond to that?
Representative Riggins.
Oh.
Yes.
Mr. Chairman and Representative Ide, or Senator Ide, I want to thank you for that comment. And also I want to expound just briefly on that. The perfect example of that land valuation change can be looked at in Natrona County specifically. That was a county that was exponentially out of compliance, and in 1 year got into compliance with the State Board of Equalization virtually through the adjustment of land. And it is why you had 3,000 appeals in Natrona County. That, to me, is an egregious approach to valuation. I can personally speak that in Johnson County, when I entered my office, it was also out of compliance. It took me almost 4.5 years to really properly reappraise the county and get it back into compliance. That is what should have happened in Natrona County, and it didn't. So you're still going through issues there, but to the point, land is being used that way. And I would purport that it's happening because of the Jan Charles Gray Supreme Court decision that said, we don't care about the numbers in the middle. It's just that number at the end. Thank you.
Representative Riggins.
Thank you, Mr. Chairman, Ms. Barlow. You already touched on the one I was going to suggest, that when they file an appeal, then starts the clock automatically reserve certain documents that you think might be valuable to your case as the property owner. And I also seem to remember when you file the appeal, it seems like it's some weeks before they kind of schedule a hearing. I know that I think I was probably in that year when they had thousands of them. So wasn't there a bit of a time frame from when I take the appeal down there and then they send me a second letter? Does that 30 days begin when I receive that second letter?
So no, you're, Mr. Chairman and Representative Riggins, no, your time starts on the date printed on your notice of value. Thank you for bringing up the weeks at hearing later. That's really a normal part of the process where you're sent more information later. But the reason I thank you for that is a new trend that I've noticed in the last 2 years is that once you file the appeal, it has been the opinion of the assessors, and correct me if I'm wrong, that you have already established that the assessor was wrong and therefore you're appealing. When in fact, you were trying to hold that spot for your appeal and then request more information up to that point of appeal. I have worked with people that once they filed their appeal, we were hard pressed to get more information. The feedback that we received was, you will get it in your findings 30 days prior to your appeal. That's no way to be able to work with what the assessor has and what the taxpayer has. It should be an open dialogue between two people up to that point of appeal. If a taxpayer is wanting to look at anything pertaining to their property tax assessment, it should be provided. But once you file that appeal, I have found in the last 2 years, you almost can't get any more documents, not until that point of exchanging evidence. And guess what? The State Board of Equalization wants to see that clear story. Otherwise, it's super hard for them to make any kind of decision. But if they're basing it off of everything the assessor has versus the very little bit that the taxpayer has, it actually makes their decision quite simple. So again, that time frame starts on your notice of value, but be careful when you actually appeal because you might prevent yourself from receiving more data.
Thank you, Mr. Chairman. Thank you, Ms. Barlow.
Well, thank you for stopping by and testifying.
Thank you for the
I don't
opportunity.
think we have any more questions. And I think at that note, we'll discuss what we're going to do about lunch. Any suggestions?
How much time do we need?
How about we come back at 2:15? And with that, we'll break.